second quarter for fall in tonnage volumes for the gold loan. And this was on the basis of as the gold price increases, there has been a decline in the gold loan assets that has been kept as mortgage by the customers, and this quarter it has been declined by 4%. Now on the guidance front, on the AUM guidance front, the company has said that they are expecting a 15% growth rate in AUM, and going forward in quarter 3 and quarter 2 of FY27, they might revise it based on the momentum they are seeing. Also, one last point is that cost of borrowings, which has been management expecting on the higher side. So these were the few reasons the stock is down.
Okay, let's go across to that conversation my colleague Alex has had with George Alexander Muthoot. Let's listen in.
Let me start by asking about the customer base, because that's what a lot of analysts are focused on, the fact that there has been a bit of a shrinkage. A lot of your numbers and metrics are looking very strong, but they're pointing to the lower end of your borrowers not coming to borrow. What is occurring right now? What are you seeing?
Yeah, thank you. See, what is happening is there is always a churn in the portfolio. These loans are not a 5-year loan or a 10-year loan or a 15-year loan or a 3-year loan. The average tenure of a gold loan is only 3 to 4 months. It's a very short term. So there is always churn in the market. So usually our loans get churned 3 to 4 times in a year. So what happens is newer customers come, the old customers go away. You were asking about the customer base. The active customer base maybe is steady. The main reason is that we looked at our numbers. We saw loans below 10,000 rupees. We have lost about 6 lakhs customers. So they have gone elsewhere. Probably they are not coming forward again. The loans between 10,000 to 30,000, again, 6 lakhs or 7 lakh customers have gone. But then this is made up by customers in the other tickets, 50,000, 1 lakh, etc. So as people are prospering, the country is prospering, people are also prospering. The very small loans are now going away. And for us, it is not the customers who give us the money, it is the loan value only, because the interest is based on the loan value only. So then we don't see anything wrong or anything amiss in the customers of the very low customers going off and little higher end customers coming inside.
Are you concerned at all about price volatility? It is an uncertain time, of course, the West Asia crisis, and gold has been volatile. You've seen a tremendous rise if you look at the year-on-year figure, and people are pointing to the tonnage. But if you look at the value terms, it's actually gone up considerably, and you've been pretty conservative on your LTV, haven't you?
Yeah, I think, again, the tonnage, again, the same thing. A customer who has taken maybe a 50,000 loan and gave us 5 grams of gold 1 year back. Today, after it churns, the new customer coming in today, compared to the person who was there 1 year back, he needs to bring only 2 grams to get the same loan. So then I can't ask the customer, you bring all the 4 grams. No, because today, at today's LTV is eligible to get 50,000 with just 2 grams. It's an example. So as the churn is happening, so the new customers come with the same loan with a smaller tonnage. So you should see into that. And that is why we again compare in one of our charts, actually chart number 90, we have shown the comparison with Muthoot Money, which is a 100% subsidiary. It's a young company. It started gold loan only a year and a half back. They have grown their tonnage, they have grown their AUM, they have grown their customer base also. A new company coming will have the same balance sheet or the same number of customers and tonnage as the Muthoot Money. But as a mature company, very old company, with a lot of old loans and old customers, we have the same problem, which I said, small customers, very low value customers, etc., going off, and customers again coming with churns with the new rates, etc. So I don't think we have. I've been always telling we don't see any concern in this. As you also said now, the LTV, we are conservative in the sense it's not we conservative. The customers are also conservative. So nobody comes and takes the whole value of the gold. they take only what they want because they expect to take back the gold.
Sure.
So if they wanted the maximum money, they would have gone and sold the gold. So they are not selling the gold because today every jeweler in India, and especially Kerala and South India, they have started old gold to purchase.
Sure.
The last 4 months, many of them, maybe the Malabar gold, the Joy Alucas, the Tata's.
And there's been an exhortation based on what the Prime Minister has been speaking about, right? He's calling for lesser purchases of gold and all of that. But I want to talk about the outlook in FY27. And there's a plan to expand the number of branches, both for gold as well as for the microfinance business. How are you going to manage OPEX to average loan assets?
Well, I think last year we opened about 160 or 170 branches. This year, initially, we are planning for the 300 branches in Muthoot Finance. So OPEX for that, we can easily absorb the OPEX here because a company with such a large balance sheet, we can 5,000 branches we have in Muthoot Finance, another 300 branches, OPEX is just marginal. Now you're coming to Belstar. Belstar is not opening any microfinance branches. They are opening only gold loan branches. As of late, they have about 100 branches doing exclusively gold loan business, and they plan to open another 200, so maybe 300 plus branches by the end of the year, and probably do little more secured lending. That is about Belstar. And for them also, there is not going to be a big, for them, a young company, they may have some OPEX, not issue, a drag on OPEX, but I don't think that will be substantial for them also.
Got it. Got it. I do want to ask about the AUM growth, and I believe the expectation for the first quarter is around 15%. Some have called it conservative because in the past, in FY26 as well, the kind of growth that you've had in gold loans is phenomenal. So are you being conservative?
No, sir. It is just that last 15 years, I have been handling the company even 15 years for this after listing. Every year, to my memory, last 10 years, we give the guidance of 15% in the first quarter. So going forward, we will revise it, sir. Last 15 years, continuously, we have been giving a 15. It's not that we are conservative, just giving a number, because as it pans out, we should be able to revise it, and we have been revising. Last year, we started with the 15, then we said 25 after one quarter, then we said 35 after the third quarter, and finally, we ended at 48. So for us, we will deliver what is required in the market. So we are there to do gold loan, and we will do it to the maximum extent possible.
I am certain that that will take place. So, but can I ask you to preempt that then, and perhaps suggest where you will end up in the fourth quarter?
I don't think today I would like to dwell on that number. Of course, you can always take your own guess, but it won't come from me, though.
Sure. Let me ask you then to give us a sense on the margins at the very least, because you've managed to improve the net interest margins in the fourth quarter. Is that trajectory likely to continue in the first, or at least in the first half?
Actually, last quarter, before that, quarter number 3, we had some one-off write-backs of NPS, etc., where we got a lot of accrued interest, etc. But that is not very much there this quarter. But this quarter, anticipating a loan or a cost of funds increase by banks, etc., we had increased our rates by about 0.75 to 1%, and that is why the yields have gone up. So if you ask me on a continuous basis, anything between 19 to 20% yield would be what we should be getting.
Okay, and so therefore, as a result of that, your NIM is going to be more or less around where it is right now?
Yeah, more or less it will be the same, please. Yeah, correct, you're right.
All right, I think that's the key excerpt of that conversation, which was important, and I'm glad we got that going. What on the note, we need to slip into a break though. On the note that the markets are flattish. The Nifty 50, can we just before we take that break? The Nifty is up 0.6%. Sensex 2. The Nifty IT is the one which is actually leading the charge higher, 2.6% higher, building on and currently trading at the high point of the day. Good going. We take a break, come back with more market action.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the storm.
Okay, welcome back. You're watching India Market Open, and you had the conversation with Mr. George Alexander Muthoot. That stock under a tad bit of pressure, perhaps on account of the shrinkage in the customer base, which Mr. Muthoot attributes to a churn in the lower end of the customer base. So people who are borrowing at 10,000 rupees or thereabouts are leaving, perhaps to go to other lenders. But let's take a look at what else is working. And you have 0.5% gains for the benchmark Nifty 50, and it's 35 stocks that are advancing. So it's a pretty decent spread of stocks that are gaining ground. A few of the early gainers have actually lost a little bit of ground, but some are holding on. You have Tata Motors PV, which was up as much as 7% at one point today. That is now trading with gains of just about 4.6% or so. Infi, Tech Mahindra, TCS, in fact the entire IT pack is up and about. It's up about 2.4% or thereabouts right now. Some of the auto OEM manufacturers also gaining ground. Maruti Suzuki is up and about. Remember, it slid a little bit in the recent past. Bharti Airtel continues with that significant up move in trade. Yesterday it was up as much as 5%. It is up another 1.7%. In fact, if we can pull up the weekly chart for Bharti Airtel, you will see how substantial that move has been in the recent past. Kotak Mahindra Bank is also up about 1.5%, and this is perhaps a standout in the context of the banking pack, which is just about flat at this point. The Nifty Bank has, of course, in the recent past underperformed the Nifty 50. Yesterday was the one exception to that rule where it gained in line with the Nifty 50. Pull up the internals of the Nifty Bank, in fact, while we're talking about it, just so that we can drive home that point. As you can see, it's mostly the public sector banks that are losing ground and proving to be a bit of a drag, but that HDFC Bank, ICICI Bank and Kotak Bank trio is resulting in just about a flat move for the benchmark Nifty 50. We've got Jefferies that has weighed in on Kaynes Technologies. Remember, this was the stock of yesterday, the stock dropping as much as 20%. It's just about holding on with gains of about 0.8% right now. But what is Jefferies saying? Let's go across to Sharad to find out. Sharad?
Well, yes, Alex, yesterday we saw a big downtick of almost 20% in the stock, and right now the stock is flat. Looking at the overall numbers, of course, there is a downgrade at play. They have maintained a buy rating, however, but the target price has been cut from 4,515 rupees, target price of almost you could say 15 to 20% cut, coming to almost 3,970. Now they've stated from strength to strain. That's the word they have used. Post 55% dip from the October 25 peak levels. A brokerage house has stated that the company is now trading at 43 times its FY27 P ratio, and it's below its trading average of 65 times. That was the long-term average we are talking about. Now, there's no company guidance which is given for FY27 and 28, and that is where a little bit of concern comes in. And because of that, the EPS cut is happening in by mid-teens, and the estimated working capital, that's expected to stay higher and more than 100 days. That's where the concern comes in. And also in FY26 to 29, they're expecting a 43% EPS CAGR growth on a low base, as well as OSAT and PCB sales for FY27.
Right, thanks so much, Sharad, for that. Neeraj, you know, you haven't felt this in a long time, I'm sure, but remember back in the day when you thought that you were broke and you found 500 rupees in your pocket? You remember that feeling? Never? You were never broke.
I was always broke. I never found 500 rupees in my pocket, unfortunately. Because तभी 500 के नोट नहीं थे ना.
I think that's what Tata Motors PV shareholders are feeling today. They were expecting it to be a really bad quarter, but it wasn't as bad as it was expected, and the stock price is up.
I was wondering where you're going with this.
There you go. So it's up about 4.5% right now. Let's find out what worked, or rather, what went slightly better than was anticipated. Let's go across to Puneet to find out. Puneet?
Well, thank you for that. The other aspect about Tata Motors is actually, while the result has been decent and beaten estimates, there are some headwinds, and I think the market's looking past that at this point of time, because while the launch pipeline has been strong, the company has still yet to do a lot more on the cost side of things as well. So that is point number one. And the other aspect that the company has mentioned that they will be launching 3 new EVs in this year. A couple of them will be on the Range Rover electric side. They will now move into the Jaguar Type 1 as well. So new launch pipeline will come through. But the cost headwind continues. Q4 had negligible cost impact both for JLR and for the India business. But the company has said that 3.5 to 5% of revenue impact because of cost could be expected in Q1. So that is the first thing to watch out for. Second, I mentioned about FY26 being the base year. So it whatever could go wrong has gone wrong in this year. They've lost production because of the cyber attack. And while that is behind, it makes a good base for the company going into FY26. So that's the second key point. And the third one that continues to be that brokerages have largely maintained their views. So Citi has a sell rating, they've maintained that view. So has Jefferies maintained and underperformed because there is a lot of uncertainty still. They've lost a lot of volumes in the US, which was the highest growth market over the last 2 to 3 years, but continues to be a tough one for the company going forward. I think what the market is cheering on today is that the estimates were so beaten down that they were at least a little better at this point of time. But also the fact that the India PV business continues to be on a very strong footing, 49% revenue growth for Tata Motors in India PV. But JLR continues to dominate, the majority of the revenue and the EBITDA. And hopefully by Q1 or Q2, you will see some more reprieve, some more information coming in. What's the expectation? Guidance still not given. Will be available in the Investor Day in June.
Thank you for that, Puneet. Let's talk about JSW Dulux. Reported a mixed Q4 with revenues and margins under pressure despite strong volume growth. But I'm going to get Mahima in to tell us more about how the company fared before we have that conversation with the management. Mahima.
Right, so Tamanna, as you rightly mentioned, the decorative business did see volume growth of around 23%. B2C also saw some improvement despite of the kind of competitive intensity that we've seen in the paint business, and B2B vertical has also grown ahead of markets. Overall, I think royalty savings are being deployed towards revenue development and promotion expenses. And this could, probably augur growth going forward in FY27. Price hikes for decorative paint business were taken around 10% between March to May. The premium side of business has still, maintained its growth traction. Industrial paints, auto and specialty coatings, there is expansion in the premium space. For marine and protective coatings, strong growth in terms of orders have been seen. And for industrial coatings, growth in coil, including marquee projects wins, has been seen. So I think the key question here would be to see as to how growth happens in FY27, especially considering crude prices and how margins will be maintained and what price hikes will be taken. So this is the overall view of what's happened in Q4 and of course what to expect going forward.
Most of Q4 has not really accounted for what's happened with crude after that. Some of that would have come in right at the end. Rajiv Rajgopal, Joint Managing Director and CEO at JSW Dulux, joining in this morning. Mr. Rajgopal, very good morning to you. Tamanna here. Thank you for speaking with us. An absolute pleasure to have you on. How would you look at the quarter gone by? And I know a lot has changed between Q4 and Q1, but let's get your summary on Q4. What has worked for you? Let's start there.
Good morning, Tamanna. As you've covered, I think the biggest thing is this entire acquisition, the integration, which is ongoing. It's massive, as you can imagine. It's almost like participating in an F1 race when you're having an open heart surgery. You've done a massive change because understand that we've moved quite a lot of things. AkzoNobel India is now called JSW Dulux. We moved our headquarters from Gurgaon to Mumbai. And while doing all this, I think I must commend the team for having delivered a 6.2% revenue growth. We've had in the quarter a high volume development for two reasons. We've started participating in categories where we were not really participating in the earlier phase. So if you look at Dulux as a brand in decorative, we have almost about mid 40% contribution coming from premium as against a market which is anywhere between 15 to 18%. So we were over indexed in premium. And one of the things when you want to grow distribution is that you need to get a fair share of your mid market and economy and other categories to be able to grow premium. So I think that's one change in industrial. I think we've seen fantastic all-round growth across all our verticals. And hence, I think Q4 well summarized is actually strong. And you know, we've sort of started gaining good share traction. It's the fastest growing quarter in the last 4 quarters. And hence, I believe, I'm fairly confident that going forward on the revenue development, we see positive traction. On the question that you were mentioning on the crude and what's happened, I think if you look at between Jan and Feb, the crude was fairly benign. The escalation started towards mid-end March, and that's where we've had to take it, more seen in the last 2 months. And yes, we are watching it. Obviously, when you look at crude as on today, the crude prices are elevated. The paints and coatings industry, paints and industrial industry, has 2 big variables, which is the price of crude and Forex. And both at this point of time are adverse, but we are putting our strategies to make sure that we work on them and we still try and navigate through it.
No, so how are you doing it thus far, Mr. Rajgopal? Because the changes in both those factors, crude prices and Forex, have been dramatic, to say the least. What is the kind of hit you're already taking to your margins?
So look, at this point of time, the crude has gone up by approximately, if you really look at our raw material pricing, has gone up by almost about 25%. Actually, raw material accounts for 55% of the total increase. So it's about, on an average, about 13 to 14%. We've already taken about 9.7. So there is a lag. I think the industry still has about a 3 to 4% to take. What we are doing, we are obviously trying to manage all our costs, trying to make sure that we are there. We see a bit of headwind in the immediate quarter, but I think on a long-term sustained basis, I think this is something that we will work towards to make sure that we are within the EBITDA margin that we've already indicated to you in the past.
Interesting. Mr. Rajgopal, good morning. This is Alex here. And as you mentioned, you and your peers have already undertaken several price increases. Just to double down on that, do you anticipate any near-term price increases that could be in the offing? As I understand it, 5th of May was when the last round went through.
Well, Alex, we took one on 5th, we are taking one today. So, I think that completes the entire cumulative to 9.7. But keep in mind, I think Dulux, if you remember our earlier conversations, we have been at a significant premium to many of your peers. So in the months of September and January, we also had to take some price drops. We're still at about 2 to 3 premiums. We believe that's the sustainable premium in which we can get sustained volume growth and revenue growth. So I think you've got to factor that in, which is a little different from rest of the players. That said, obviously, given the current situation, we are trying to manage our costs and making sure that, we are having our pricing strategies in tune to make sure that we deliver the immediate quarter. I think this is if you ask me, this is something which has happened immediately. We've also seen today the announcement of the fuel prices. So yes, I think part of the job is to try and manage and navigate through these moments. But on the whole, if I were to look at it, I think if I were to look at, a couple of quarters ahead, I think these are things that will be well on track, because I do think that the industry ends up normally taking the price increase, given that it's going to affect all the players.
So you mentioned the strategy on widening the scope of your coverage in terms of the products that you sell, right? And I'm guessing that that's going to be underway in FY27 as well. I'm wondering whether, given all of these external factors that you're dealing with, your marketing spend will get affected. You'll have to tweak that to a certain extent, because ultimately word has to go out. You have to compete with the rest of the industry. Are you going to use that lever to control costs?
Well, I think two parts. I think brand is something where we've been underinvested, so we'll continue to invest on the brand. But exactly, we'll have to navigate it depending on the time and depending on how costs escalation, etc. continue. So we'll have to balance it, because there's only that much that you can pass on to consumers. At the end of the day, you've got to make sure that the brand's adequately priced and you're competitive in the market. So it's something that we'll have to look at. If you're referring to television advertising spend, look, in the current quarter itself that we've been fairly active on media, and you would have seen the advertising campaign. So our endeavor is to try and make sure that brand we continue to invest in. But yes, to answer the point, Alex, we'll have to wait and see how the journey goes, how the cost pressures come in, and then decide our strategy. We are looking at all elements. We are looking at a lot of value creation, value engineering programs to try and see that we continue to invest on what I call good costs. So, focus on elements, what I call bad costs, or the costs where you can really try and tweak to try and make sure that you're able to continue to invest in the brand.
Absolutely. So could you leave us with an outlook? And with that safe harbor, of course, some of your peers have talked about the fact that volumes have been robust enough to absorb those price increases. What is the anticipation for FY27 for Dulux?
Look, it's a little too early for me to give you a full year outlook. At this point, when you were to look at it, yes, there is an immediate small challenge. But I think on a full year, when you ask me, I do think that, I think the sort of volume growth that we are seeing, and if the costs were to, sort of scale back a bit, I think we should be easily able to absorb it, because the large part of the price increases has been taken. You've taken almost 9.75 out of the 13%. So in my view, I think it's something that we'll have to navigate maybe for a couple of months. But on a full year basis, I do think, and we are also driving a lot of programs, Alex. As you are aware, the integration has already started between JSW Dulux and JSW Paints. Our projects business, which is our first, the integration of the two teams have happened. In Mumbai Metro, for example, the team is selling both the brands. We're going to launch it in the next 7 cities in this month and going forward. So a lot of these integration programs are in play. We are working on a lot of programs in terms of, common procurement and etc. So we do see the benefit of that accruing as we move ahead.
All right. Welcome to our home, Mumbai, and wish you all the best for FY27. Thanks so much for taking the time.
Thank you.
Right. So far, so good for the paints companies, given the environment.
Given the environment. And the comedy doesn't seem to be too bad either, cross fingers. Okay, well, let's try and get you a big FI voice to try and understand how is it that the global money is thinking about what to do in the times to come, or what's the view on India. I think that's the key point, right? And it doesn't really get much bigger than Gargipal Chaudhary. She joins in right now to talk about how she thinks from her lens about what's happening around the world and what would she do in the current scenario. Gargi, thanks so much. She's, of course, viewers. For the benefit of our viewers, she's the Director, Managing Director, Chief Investment and Portfolio Strategies Americas at BlackRock. Gargi, thanks so much for joining in. I'd like to start off by asking you about how do you think about the current investment climate wherein we are hit with a black swan almost every single day?
Absolutely. And it's wonderful to be back here. Thank you so much for having me. So you raise a really important issue. If you think back to just maybe the last 6 years between the supply chain impacts from COVID and obviously the Ukraine and Russia conflict, and now the Middle East, and while all of this is going on, you've had AI unfolding. I think what we're recognizing is, in addition to the usual growth and inflation and macro dynamics and central bank, you have these massive structural structural themes and supply chain and resiliency related themes that are impacting all of the markets that we trade and care about. So I think when your listeners are listening to this and when investors are thinking what that means for markets, recognizing that there are these structural drivers, and obviously AI is one, supply chain resiliency is another one, absolutely energy security is one, which are going to, on decades and years, going to continue to drive markets. While at the same time, what is the CPI data? What did the RBI do and what did the Fed do? That's going to be more week to week and month to month drivers of price action.
Okay. Gargi, most people are thinking and telling us also that in terms of the flow of money, the AI trade is continuing. And one of the reasons why investors might be, there is an either or, that people are flocking into the AI trade out of genuine interest because there's a pot of gold at the end of it, or there is a left out feeling or a FOMO effect as well. Which do you think it is?
I would say more of the latter, because, even if you think back to sort of 2025, when we were writing, we just published our investment directions, which is our sort of outlook for the next few months. Even when we were writing it last year for this year, we were like, okay, CapEx expectations probably higher than the, call it 600 billion that was expected then. And every single quarter, what we're recognizing is not only that the spending in CapEx, and obviously that's over 758 billion now, not only is that continuing to rise, but importantly, there is revenue on the other side of that. So when you look at these large companies across the world, it's not just in the US anymore, by the way. We're looking at these large memory companies across Asia. We're looking at that in Korea. We're looking at that in Taiwan and China. What we're seeing is that there's revenue on the other side, earnings growth continuing to surprise higher and higher. For example, I'm sure you know this and your other guests have spoken about this, Korea, despite the incredible, call it over 150% return, PE is trading at, single digits, which obviously is a manifestation of the incredible earnings growth. So I think the CapEx is real. Of course, the pace of change will have to slow down, but also a recognition that the theme, the sort of the choking points of AI might continue to shift. So for right now, maybe the first version of this was just the cloud providers. You saw that take place. Now the choke point is mainly about memory and semiconductors, and we're certainly telling investors to continue that focus both in the US as well as in emerging markets. We don't know what the next one is. This is still a new technology, but recognizing that you need to be invested in this and doing so in a diversified manner. So yes, in the US markets, but certainly in emerging markets, which are more and more becoming very tied to the AI theme.
Are. And so therefore, because some of the flows have already happened, what about flows in the future? Is the world at large overweight US and underweight EMs, and therefore does that money flow continue into the EMs at the cost of the US? How does it work?
I think that, again, I don't want to comment too much on the money flowing over the next, month or so, but I do think the trend will continue over a period of time. So over the next 2 to 5 years, absolutely, the money is most certainly going to flow. And just to give you a little bit of context, when you are a US investor, and obviously I spend a lot of my time globally, but focused on US clients as well, what we find often when we look at US investors' portfolios is a deep underweight to emerging markets, a huge overweight to US markets, but a deep underweight to emerging markets. So if we were to believe that the AI trade is going to continue, which we certainly do, and it's going to have global ramifications, whether it be through the CapEx channel, whether it be through the revenue channel, whether it be through the next leg of AI, if that's going to continue, investors will more and more want that diversification in their portfolio. So I do believe the next leg of this is more US investors diversifying into EM from having a deep underweight now to even a market neutral weight. And I think that points to more EM flows, which is another part of the market that we're really sort of continuing to be bullish on. Obviously not all EM is the same right now. And that's something that we have to reflect on and contend with, recognition that the global spillovers of CapEx will have different impacts on different regions. Obviously, those that are exporting more memory will have more revenue growth and more earnings growth in the future. And those that are in fact harmed by not just not having the semiconductor trade, but also actually importing oil prices at a time when oil prices continue to stay higher for longer, might have some a tougher challenge in the days ahead.
Okay, Gargi, since India forms a part of that EM pack and until September 2024 could do no wrong, now suddenly kind of in a tight situation, what is your view on India, high-level view on India?
So I'll make 2 points on India. The first one that you reflected on, which is certainly the ramifications of being an oil importer, facing higher costs of import, as well as maybe missing out a little bit, especially in the Asia complex, where 6 of the 7 largest market cap stocks right now in the world happen to be in Asia. And obviously India is one of them, which is fantastic news, but maybe not benefiting so much from the AI trade, recognizing that that's happening at the same time. But what we must not forget is all of the benefits that we've spoken about for years for India still are true. There is the demographic dividends, so as to say. This is a young country, manufacturing-led country. This is a country where domestic demand is high and going to continue to be so. This is a country that more and more young investors are going to and already are gravitating to their own local markets, as well as the point that you made earlier, valuations having reset pretty meaningfully, especially in the sort of underperformance versus the rest of the emerging market complex. So I think all of that will eventually structurally remain a massive tailwind for the country. I do think we have to recognize some of the more cyclical challenges, especially in a world where oil prices might remain a little bit higher than we had originally anticipated coming into 2026.
Got it. Okay, then just one quick question. I mean, if the resolution happens on the conflict, does that become a catalyst for India? Or do you think the AI trade continues and money flows into the other EMs and comes into India only after a bit of a lag?
India doesn't have as much of a direct AI play. There's also the concern around, what is the future of software and to what extent that is something that is a cloud over India's performance. I do think oil prices coming down significantly and us having reassurance, and I want to underscore this point, us having reassurance that there is global energy security. So it's not just the strait opening up, but it's a recognition that we can actually have proper energy supply and not having sort of blocks in the future. I think that is something that markets and investors around the world will need. But I do think, yes, us having the expectation that energy prices are going to be lower is going to be a risk-on environment for much of the oil importing countries, such as India. I think that's going to be a small positive catalyst. But I do think we will need to see that massive inflow that we were experiencing in 24 and 23. We need to see some of that return to the US market. And this is where I'm very hopeful that the domestic demand will certainly play a large role. Look, the positive tailwinds have not gone away. I want to underscore that again. The demographic tailwinds, the manufacturing tailwinds, those are all there. I do, however, believe that right now there's a huge amount of focus in some other parts of EM, which is actually bringing a lot of flows into the Koreas and Taiwans of the world. So we just have to wait for that to play out a little bit. So there's a cyclical story. The structural story is really, really positive.
Some respite, but maybe after a bit, after some time. Gargi Pal Chaudhary, thank you so much for your views. Really appreciate your time. All right, that's the view from a very large money manager, BlackRock, and talking about India currently. Okay, top sources tell NDTV Profit, the big story, that the government is shielding consumers from the full impact of rising global oil prices, with both the center and the OMCs absorbing nearly 1,000 crore rupees in losses every day. Shimi has these details. Shimi.
Yeah, that's right, Neeraj. The government's message amid this, global crude prices is very clear. It doesn't want Indian consumer to bear the full impact of the ongoing geopolitical crisis through steep fuel price hike, and that's what reflected in today's price hike, petrol, diesel. So what we are picking up from the top sources that the oil marketing companies and the government are currently absorbing losses of nearly 1,000 crore every day to keep petrol and diesel prices stable, despite a sharp rise in the crude price. And in fact, under recoveries are estimated at around 26 rupees per litre on petrol and nearly 82 rupees per litre on diesel. Now, this has definitely a very, very important point and a large gap, as you can see on the screen, but it's coming from the top sources, and they say that passing on the entire burden to consumer could trigger a massive economic shock, because fuel demand in India remains largely price inelastic, and in fact internal assessments suggest that a full pass-through may require fuel prices hike of as much as 200 to 300%. Now, this is based on their internal assessment, which could, perhaps disproportionately hit lower-income household farmers, etc. So, they're giving the reasoning and talking about this whole scenario that India imports nearly 80 to 85% of its crude oil needs, and every $10 rise in crude prices increase the country import bill by an estimated $13 to $14 billion. Now, they describe this current situation as a massive twin drain, with crude import costing 12 to 15 lakh crore annually, while gold import have surged to nearly 6 lakh crore.
All right, so some absorption happening there at the governments and the OMCs, and thanks for that, Shami. A reaction from IOC on this price hike. Listen in.
So it's a very small rise, and the lot of pressure is there. But I can tell you that Indian Oil's group companies, 10 refineries are working round the clock and more than 100% capacity, so that there will be no crisis, no dry out at any of our retail outlets. So the hydrogen buses, today is the day of the hydrogen buses. They enjoy the ride, and let us come together to save fuel, and in this the emergency time and this critical time.
On that note, we wrap it up on this leg of India Market Open. From all of us who put the show together, thanks so much for watching. Ask Profit up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world. from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Nabal Tata, Chairman, Tata Trust.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me as always is Puneet Zaveri. And Puneet, some relief in terms of where the markets go. The Nifty 50 at least is up by about 0.5%. Largely short covering is what we see in the IT space. Nobody wants to take a chance over the weekend, and that's why we're seeing, some short covering when it comes to some of these IT names. Let's try to pull up the heat map and see as to where the action really is. Of course, Tata Motors PV, Puneet would describe it better as to what's worked this quarter, but overall the stock seeing an uptick of around 5% But remember what Kushbura said. He said that this is the time to probably book your profits. Coal India up 2.7%. Adani Enterprises also seeing gains of about 2.5%. Kotak Mahindra Bank, Infosys, Dr. Reddy's, Tech Mahindra, some of the other names that are also fairly doing well. On the flip side, you have Hindalco, which is down by about 2%. Reliance, a heavyweight, which is down by about 1.7%. Trent, SBI, Eternal are some of the other names that are in the red as we speak. But the Bank Nifty, let's try to pull that up, is up by about 0.2%. But, slightly underperforming the benchmark right now, just hovering around the 54,200 odd levels. With regards to where the sectors go, let's try to pull that up and see as to how sectors are doing in trade right now. Nifty IT being one of the top gainers, up almost 2%. Nifty Media also doing fairly well. Pharma and FMCG are also some of the sectors doing fairly well in trade today. But on the flip side, you have defense, where there's profit booking down 1.6%. Oil and gas, on the count of price hikes that we talked about, down by about 1% and realty down 1% as well. Let's try to pull up the advanced decline ratio and see as to what that is looking like. Because overall, Puneet, even the broader end of spectrum is kind of underperforming the benchmark right now.
Well, most certainly, but there's a lot of action today as well, in these individual names as well. So pull up the mid cap 150, the small cap 250 as well, and that'll give you first the picture on the index. It's come back in the green right now, but the small cap as well yesterday was largely not giving up any in the gains essentially. So while there was gains in the benchmarks as well as on the mid cap 150, the small cap was just chugging along, and similar that we are seeing that today as well. For the individual movers on BSE 500, here is where the picture is very interesting, because Sheela Foam, one of the key stocks, and we spoke to the management today as well, up 18%. GE Shipping is the other one, strong results. Tata Motors PV, and we'll discuss that with our guest today as well, up almost 5% right now. United Spirits post earnings is also up almost 4.5%, while amongst the others, Sai Life Sciences, let's pull up that counter as well, that's also doing well. In the losers, you have Data Patterns and EPL that is largely down. Endurance also post results, but Sai Life Sciences is tanking in trade today. So is Zaggle. Stock was down 20% in yesterday's trading session, and today as well the downtick continues to around 26% in the last 2 days. And that's largely what you're seeing in terms of a lot of individual movers reacting on results as well. But let's start taking your stock related queries now. Sameer Dalal of Natwalal and Sons Stockbroker joining in. We also have Saumil Mehta, head retail research at Mirae Asset, Sher Khan on the technicals. Gentlemen, both of you, thanks so much for joining in today. The first question then, right off the bat, this one's coming in from Charan from Bangalore actually, and he wants to know about Tata Capital. Results are largely okay, Sameer, but he wants to know a 5-year view. Would you recommend him to buy into this counter right now?
Yeah, I think one can buy into this counter, but you see the NBFC space entirely is so large that then the question comes is why specifically Tata Capital and not something else, right? So individually, Tata Capital by itself is a buy from the fact that they have relatively okay cost of borrowing. The sectors that they cater to, which is the auto, which is the farm, which is, the various loan against shares, all of that, that will continue to grow. But there are multiple players in that space. So obviously, growth is going to be something that comes for everyone. But I would focus more on companies that have been able to grow more profitably at a faster clip. So instead of a Tata Capital in this space, one can probably look at something else also. But Tata Capital individually per se is a buy.
Okay, all right. We've got, I think, Sai calling us from Hyderabad, our first caller for the day. Sai, a very good morning to you. What's your query about?
Yes, good morning. I'm having a query regarding Reliance for long term for at least 3 years, and I'm having 50 shares. I need the I want to know will I get at least 10 to 15% for 3-4 years, and I would like to get an answer from Samir sir, because I like the way he explains everything.
Sure.
I'm a fan of it.
Okay, Sai, got your question. Samir, I hope you heard that. Sai is a fan of yours. He's saying whether a 10 to 15% return on Reliance is possible for the next 3 to 4 years. Do you think that's possible, and should he continue to hold?
So first up, Sai, thank you very much. Happy to hear what you have to say. As for Reliance, I would say 15% CAGR is very much on the cards. I'm not talking of 15% return. I'm talking of CAGR return, right? Which is compounded. So when you look at it over a period of, say, 3.5, maybe 4 years, you could have 70 to 80% return on an absolute basis. Why am I so positive? Two things. One, in the petchem space, I think they're going to make huge profitability going in the near term, next 1 to 2 years, because there has been damage done to some of the refining capacities in the Middle East. And also, it's not going to be easy for them to start up everything right away. So with that, refiners are going to be in demand, and companies like Reliance, who are the largest in the space, I mean, individually standalone in India, they will stand to benefit. Second, we believe the geo listing will come. That will unlock value. And there are 4 points, actually. The third is retail business, which we think will start scaling up much better once the SSSG comes back and once consumption starts. And they have the largest footprint in India, largest amount of brands, largest amount of everything. And once SSSG picks up, you'll see the operating leverage there. And at some point in the next 2 years, you'll probably see a listing of that. And lastly, on the new energy business, look, they've barely got going. I think their solar panels have just got commissioned. They're still doing the backward integration for the cells. Once all of that comes up, plus they set up their capacity, green hydrogen, all of that is going to be a game changer and increase in profitability. They're in the investment phase right now. But once all of that plays out, I think the stock will do really, really. So buy more if you can.
Got it. Well, thanks so much for that, Samir, for the detailed answer. You saw there are multiple key aspects, as Samir mentions, on Reliance to look at. So keep that on your radar. The next question is coming in on Shriram Finance. Bought 30 shares at 954, and that's what Ramesh has done. Somil, well, firstly, good morning and welcome to the show. What's your view on the stock now? Should he continue to hold?
Shriram Finance looks good to me, and it has been consolidating for a little while now, between 1100 and 900. It's a broad range. However, I think this stock should continue the sideways correction and then take support and start the new wave on the upside. The supports would be around 200 daily exponential moving average, which is 880, and there is one more a support leg, which is 860. So these are the two supports which I'm looking for. You can keep a very strict stop loss around those levels and then keep holding on to your position. I'll be expecting higher levels above 1250 plus for Shriram Finance, because there's a triangle pattern, and I'll be expecting this entire pattern to break on the upside. It will take time to form, but I'm pretty positive on the stock.
Okay, the next one that we have is on data patterns. Uma from Bengaluru has around 19 odd shares at the levels of 4061. Wants to know if she can average and what's the fundamental view for the next 2 odd years. Samir, your view on data patterns?
Sorry, this one is not under coverage.
Okay, no worries. Saumil, your view on the charts from a slightly long-term perspective?
See, I'm positive in the long term, and I think the trend will continue, which is the uptrend which we have seen in the last 6 months. It is trading about 200 daily exponential moving average, but we can see a little a sideways correction or a little correction on the downside. Support should be around 3,400, and the next support is around 3,025. It's a little deep, but 200 daily exponential moving average is around 3,000. So I'm not expecting the trend to reverse on the downside, but I'll be expecting the stock to take support around the support levels and then start the move on the upside.
Got that view, Saumil. That one's on data patterns, reacting today possibly on results. But of course, one more counter to monitor. It's done well for investors, but yes, down 5% today. Next one's coming in from Angad from Indore. He wants to know if it's the right time to enter JK Cement at these valuations for the medium term. Would you recommend that, Samir? Is it one of the plays? Because has seen some correction in terms of valuations, of course, from those premiums. But what's your view on the stock?
So I have a neutral view on JK Cement. My question comes is, look, there are so many cement counters. Why specifically on JK Cement? I would rather focus on some of the larger players where if the utilization rates start moving up from the 75% to the 85% over the next 2 to 3 years, the operating leverages play out, right? So obviously, also stocks that have seen a sharp correction are part of the Adani group, which is part of your network, where we think, the operating leverages can have benefits going forward. So ACC, Ambuja, of course, you can choose which one you want. Eventually, it'll be one company because they're merging. That is one. And the other one I have a very positive view on is Shree Cement. Now, everyone looks at Shree Cement and says valuations are expensive. But the point remains that, look, they are increasing their capacity. They are going to become the third largest player in the country. They are working at about 82%. They have one of the lowest cost of productions because of their vertical integration, plus their renewable energy push, plus their pet coke utilization. Of course, all of that right now in the short term has been hit because of the price changes in crude. But we believe once all that stabilizes, you will see companies which are doing this scale up better and get better earnings and trajectory. So I would rather focus on those than a JK.
Okay, all right, so that's the view coming in for the cement space. The next one that we have is on Gland Pharma. Now, this is from our viewer Yogesh Nayak, who's writing us from Bengaluru. What he's asking is that he's bought it at the levels of 890. Currently, it's come down to around 763. Wants to know if he can continue to hold this one or not. Saumil, your view on the charts for this one?
I think you can keep holding on to the stock. View would be positive. In the very short term, I think there is a triangle pattern forming. I'll be expecting this to break on the upside. Strong support. So this is Gland Ispat, isn't it? Just give me a second. I think I'm looking at a wrong.
The stock is currently trading at 763. I mean, a 1 month negative return of around 3%. Today, it's down by about 0.6 odd %.
Okay, got it. So this one, the stock has, corrected a little bit, but I think the strategy should be to buy on declines. It has taken support at a 40 daily exponential moving average, and the next support is around 677. So the first support is around 740, and the next support is around 645. So these are the two supports. Buy on decline should be the strategy. My view is positive. My targets would be the previous swing highs of around 935, and if it crosses above that, then the next leg starts on the upside, confirms on the upside for a target of probably 1,000 plus.
Got it. Well, that's the view coming in on Gland Pharma, but Gujarat State Petronet is the other one we're focusing on because we're getting a call from Bengaluru about the same. Pradeep, very good morning to you. What's the query about GSPL? What do you want to know?
No, see, I'm a bit confused. I'm having 50 shares, 100 shares of GSPL bought at 233 and 50 shares of Global Spirits bought at 851. Now, I wanted to know, I'm a long-term investor. I wanted to know which I should, because I need a bit of money. Which I should sell and which I should hold for the long term.
Got it, Pradeep. Generally, we do take one question at a time, but I think, your situation warrants an exemption at this point of time. But Samir, do you have any coverage on Gujarat State Petronet or Global Spirit, and any recommendation that you would give Pradeep if he wants to exit one of the counters just to raise liquidity at this point of time?
So I do have GSPL under coverage, and we find valuations quite reasonable. If you look on the console basis, I think it's trading at about 10 or 11 times trailing earnings. We do believe that growth will also come through. So attractively priced. I don't have coverage on Global Spirits, unfortunately. So, for me to tell you to sell Global Spirits would become an easy call because I don't cover it. But I think you need to probably speak to your advisor, which of the two is better. But GSPL, we are quite positive. So if you can hold on to that, I would strongly suggest you hold that. Global Spirit, no call.
Okay, all right. The next one that we have is coming in on Trident. Our viewer Teja from Nellore, Andhra Pradesh, is holding around 6,000 shares at the levels of 53. Wants to know if you can hold or sell, and wants a long-term view of 10 to 15 odd years. Any view on this, Samir?
Yeah, this is a stock that I used to hold back in the day. We luckily managed to sell off at higher prices, closer to 45 won levels. Of course, we made money on it though, because our cost was $7. But having said that, the stock probably ran up from 7 to 60. If you go back into the history of this chart, over a very short period, I think it was maybe 6 months to a year, because of the export business and the towels business and the bedsheet business that they have to do. At that same time, chemical business was booming as well, which is also some of the focus that they have. Ever since that, obviously, we know what's been happening with the tariff structures in the US. Because of which certain sales to that space has been hit, which has, of course, affected Trident's business. Over a 15-year period, yes, I think one can consider holding on. But if you're asking me for a slightly shorter term, 2-3 years, I'm not expecting the stock to do anything, because even after this sharp correction from 70 to this to whatever 25-30 levels it's trading at, the valuations are still expensive. And I don't really see the light of day the near term for sales seeing a major boost, because competition in that space is obviously quite strong. More players are exporting. Plus, we obviously have those tariffs which will come in, which will affect some amount of profitability. So given all that, there are far better companies to invest in from a 15-year perspective. Why invest in a Trident, which is cyclical in nature, which doesn't have, which has risks when it comes to a lot of other things. I think there are structurally better companies to invest in. So for me, it would be an avoid at this point of time. But from a 15-year perspective, I'm sure you'll make some money on it.
Okay, all right. So that's the comprehensive view coming in on Trident. I think we have Aruna who's calling us from Hyderabad. Aruna, very good morning to you. What's your query about?
Yeah, very good morning to all of you, ma'am. Thanks for taking my query. I wanted to buy Quality Power, ma'am. So after Q4 results, what is the long-term and short-term view on this? And what is the buy price? Is that a correct decision to buy this Quality?
Okay, all right. Got your question. I'll take this up with Somil, because Somil, this stock has seen a great momentum since the month of March, right? But since a couple of days, since I think 27th end of April, we've seen a small fall coming in for this one. But numbers were great overall in terms of where Q4 goes. What's your view with regards to Quality Power?
See, Quality Power is already in the uptrend, and I'm positive on the stock. I've been tracking this stock for a little while now. It was correcting around end of 2025, but now it has again started moving up. Very positive on the stock. I'll be expecting a target of, probably in the medium to long term, I'll be expecting a target of 1400 plus. At the moment, the support is around 1050 and another support is around 850. 850 is the 200 daily exponential moving average. So these are the two supports, but my view is definitely positive for the target of 1400 plus.
Got that view, Somil. But let's go across, take another caller now from Chennai. And Subramaniam has a stock query for us. Subramaniam, very good morning to you. What's your query?
A very good morning to all of you. I'm holding Kaynes Technology at the level of 3778.
Okay.
3778. Can I exit or should I average at the current level? This is for the 2 years timeline. I'm looking for the response.
Got it, Subramaniam. But Samir, then, yesterday, of course, was the result, the conference call also, and management has affirmed might take 2 to 3 quarters for the cash flow to turn positive in that sense. But what's your view, Samir? It's not an easy one, but at such valuations, should one look at the current fundamentals and rather just ignore that it's fallen from that 7,000 odd levels? How are you seeing it?
So when you're working in the market, Puneet, you can't choose to ignore anything. About a month ago,
then Samir, it becomes very lucrative, right? At 7, after falling 45%, it's lucrative, but the numbers don't show that as of now.
So Puneet, I was just going to say, this is about a month ago, you and I had a conversation on Kaynes, and I was like, this is one of the stocks we missed covering. And I was really upset about it. But after seeing yesterday's fall, I'm not feeling so upset about it anymore. Having said that, look, Kaynes is still not under active coverage, so I won't comment on that one. But EMS space, we remain very constructive and very positive, right? We think the opportunity for India, Make in India, with all the government incentives of PLIs, for the growth opportunity of the domestic local market when it comes to the EMS space is fantastic from a longer term perspective. So we are positive. The top pick for us after a sharp correction, also another stock which has seen a sharp correction, is Dixon Tech. It's corrected from 17,000 down. It went, I think, to 9,000 or 9,500 odd levels. It's right now maybe at 10,500 or 11,000, somewhere in between that. If I look at it, the valuation multiples have come off quite sharply. There are some hidden triggers, not hidden, but visible triggers, which haven't been fully approved by the government, which is one of the telephones that they will be making for a Chinese company. Once that approval comes and that sales kicks in, I think what you'll see is the growth momentum coming back. And the minute the growth momentum comes back, the operating leverages play out, you will see the stock probably moving back up. So if I had to make a call, I would say sell off your Kaynes Tech if you have it and move it to Dixon, because Dixon has triggers which could move it over the next 3 to 6 months. And from a 2-year perspective, we remain positive.
All right. But, just for viewers' perspective, the way we've seen buying action in Kaynes today from its day's low point is also very interesting, because in the early open, it was down by about 4 to 5%, and we've seen quite a good recovery coming in for Kaynes. So probably
what's
now people are seeing some value.
Kush Bora was on the show yesterday, so he's like 3,300 se jaake wo 4 baar upar aaya.
Yeah.
But his target
Strong
is,
support.
he thinks that it could go to 2,800. So you could still see some pressure, and probably Samir starts taking that into coverage then, because we continue to have so many queries on Kaynes Tech. But, viewers as well as Saumil and Samir, let's start taking questions in the rapid fire round. You both know the drill. The first question, that's coming in, it's on JSW Cement, bought by our viewer Satyan at 122. He wants to know a short-term view here, Saumil. I know it's a recent listing, but what's your recommendation?
My view is positive. Hold on to the stock. Keep a very strict stop loss around 119.
Okay, Prem from Hyderabad wants to buy Bharti Airtel right now. Does it make sense, Saumil?
Short term, no. It has already done the run up. But yes, buy on decline should be the strategy.
Murthy wants to know a view, Samir, on NSDL. He's bought shares at 1,000. How would you view this counter now?
So very positive. From a longer term perspective, we think the number of demat accounts opening will keep increasing in India. So hold on to the stock that you have. Maybe you can average down a bit.
Okay, Idea Forge is the other one. Our viewer Venkat from Andhra Pradesh is holding 7,500 shares. Wants to hold it for 6 months or more. His buying price is 580. Saumil, your view on the charts?
Positive. Keep a trailing stop loss around 724 and keep holding on to the stock. My targets would be around 950, 970.
On Sharda Cropchem, also Saumil, our viewer, Lalita has bought shares at 1193. So she's currently in the losses and asking what's her view on the stock now? Can she, what can you suggest at the current juncture?
See, it is in the downtrend at the moment, but however, I am positive on this stock. Keep a very, very strict stop loss around 900.
Okay, the next one is on Tata Power. Our viewer is currently holding Tata Power and wants to know whether he can continue to hold from a long-term perspective. Samir, your view?
Absolutely. Hold on. Great story. I think it'll go up very nicely.
HBL Engineering is the next one. Saumil, bought by a viewer at 650, and this is Padma from Bengaluru asking a short to medium term view on the stock.
Positive, absolutely positive. Keep a stop loss around 740. My targets would be around 900 plus.
Okay, Tangamail, Murli from Bengaluru wants to know if this is the right time to buy ahead of earnings. Saumil, would you recommend that?
Sorry, which one?
Tangamail Jewelry.
Jewelry stocks at the moment I would avoid. There are a few headwinds here.
Yes.
Buy on decline should be the strategy. Support would be around 3,200.
Got Time Technoplast is the other one. Samir is laughing on the fact that there are headwinds, I think, on the jewelry part. I think Samir will come to you on that post the break. But on Time Technoplast, Samir, Arvind has a query. He's holding shares at 198. Do you have it in your coverage?
So we don't have it under coverage, but I do know the company quite well, and I would say hold on.
Okay, can I invest in BPCL? Priya Malik is asking, considering the hike. Samir, your view?
Sell it and run for the hills.
All right, that brings us to the end of this rapid fire round. I think that answer given by Samir was very interesting and something to keep in mind for sure, because it's important, right? But Saumil, thank you so much for taking out the time and helping us answer all those stock-related questions. With that, time to slip into a very, very short break, but don't go anywhere. We'll be right back.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit on NDTV Profit. If you haven't already, do start sending in your queries on WhatsApp, and you can also call us as well as speak to our guests as well on the stock-related queries. But before we start taking a few more of your queries as well, some live footage is coming in now. This one's coming in from China. President Trump will be departing from the country after his 2-day visit, and most certainly we'll get to hear a lot more about the trip, about what was discussed. I'm sure from through social, I'm sure from the other official sources as well. But it concludes a very important visit. You had one of the major dignitaries, especially from the tech sector, from the US, Elon Musk, Tim Cook, amongst others, who had also made their way to China. And hence, it's a very crucial visit, of course, in the country as well. We'll get to know a lot more of this and get you some more live footages as we get them as well. But this is live coming in from China at this point of time. But let's go across and take, a very quick next caller as well from Delhi. And Dimple has a stock query for us. Dimple, very good morning to you. What's your query?
I have 40 shares of Mazagon Dock at present. I bought it at an average price of 2,300.
Okay.
I just want to know, is it the right time to add more, or should I wait, keep it for long term, this much only?
Got it. Well, got that view, Dimple. But Sameer, on Mazagon Dock, what's your view for Dimple? Should she continue to hold? She's bought it at 2,300.
Since you bought it at 2,300, I think you can hold on to it. But for me, I find the stock expensive. I think the growth is not going to be as great as everyone is predicting. We've already seen one of the defense companies come and announce its numbers, and they've been a bit disappointing when it comes to growth. I think we're going to see similar things across the board when it comes to something like a Mazagon Dock or Cochin Shipyard. It's going to take them a while before you start posting really good growth numbers. Valuations are rich. So if it comes to 2,000 average, but I mean, from a 5-year perspective, yes, you'll make money, but wait for 2,000, and if it ever comes, then buy it at that price. But hold on to what you have, since you got it at a good price.
Okay, all right. Time to take a look at the F&O space, and we have Sharad joining by to give us some perspective. I think IT is where the action is today. Sharad.
Well, that's right, Mahima, and there's a little bit of short covering happening in the IT. There was a good sell-off in the last 4 to 5 trading sessions. Yesterday, also the markets made an attempt for short covering, but of course it fell. But today itself in the morning, we see Adani group of stocks are leading the pack. Adani Post is up 2.5%. And the banking names are doing well. That's where the technical strength is coming in the markets. No major losers as such, but yes, Reliance is a major drag coming in today. And of course, SBI and Trent also falling more than 1%. But stock-specific moves, let's see what's there in this overall positive momentum. We have United Spirits and Tata Motors PV. These are all back on the earnings. We are seeing a good long build-up happening in these counters. Apart from this, if you look at the short build-up, we are having HAL, and of course some broking reports are coming up with adverse news flows. We'll be understanding from the management as well. There's a con call. Muthoot Finance also down 5% in trade, especially on the lowering of the customer base. The long unwinding goes in for BHEL and HPCL. Largely reversals are happening in the OMC counters after the price hikes were announced, and the short covering candidates includes Precision Systems. The second straight day we are seeing buying happening in the mid-cap IT space, at least for these counters. And the Force Motors over here on back of earnings, that stock is also doing well. It's up 3%. So net the sentiment is positive, and it's likely to sustain in the trading session today.
Got that view. Thanks so much for that, Sharad. But let's go across and take our next query. This one's on BLS International, bought at 272 odd, and this is Bhaira who's asking the question. And also let me welcome in Devin Mehta, who's the manager, technical and derivative analyst at IDBI Capital. Devin, very good morning to you. What's your view on BLS International now for the medium term? If you can give us a view.
I think BLS International looks weak on charts. I think one should try to exit on bounce near 272 levels itself. On the lower side, there is support at 245, but the structure remains weak. So I'll suggest to exit on bounce.
Okay, all right. So that's the view coming in on BLS International. The next one that we have is on Azad Engineering. This is from our viewer who wants to know, in fact, whether a fresh entry in this one for a good momentum makes sense for the next 1 year or not. Devin, your view on this one?
I think overall structure remains positive. One can try to enter at current levels. That is fine. It is a buy at current levels. Overall structure remains positive. On the lower side, there is support around 2090 levels. One can have a good risk reward ratio from this particular level. So this is buy for current levels. The stop loss of 1090 for the target of 2350 levels.
Got that view, Devin. And of course on Azan Engineering also results coming today. So continue to monitor the stock. Has performed well in the recent time frame with market preferring a lot more on the aerospace, but continue to monitor this counter. The next question, that's coming in now, it's from Anjali, who's dialing in from Hyderabad. Anjali, very good morning to you. What's your query?
Yeah, very good morning to all of you, sir.
Good morning.
Actually, I wanted to buy Angel One, sir. So
okay.
what is the support and resistance, long-term and short-term view on this?
So you're looking at the charts, Anjali, right now. Is that correct?
Yes, sir.
Okay, got it. Devin, what would you recommend on Angel One? Is there a good time to enter this counter?
Yes, I think overall structure remains positive. We have seen a breakout previously in this counter at 285 levels. It has also retested that breakout levels, and we have seen a 50-day exponential moving average close to that level. So I think this is a good level to enter. And 285 can be the stop loss for short to medium term. 330 can be the immediate target, and after that it can move towards 355 levels as well.
Okay, the next one that we have is on HAL. Our viewer Vijay from Dubai says that he's holding 149 shares at an average price of 3962. Sitting on profits of around 67,000 odd rupees. He wants to know whether an estimated target price of 5,500 is possible on this one in the next 2 years or not. Samir, I'll come to you on this one, your view on HAL.
So anything is possible, but is it probable? Probably no. So like I've told you, the results, if you look at it, they came out yesterday. The year FY25, they did a EPS of about 137. They've done 135.5, I think, this year. So growth and profitability has been zero. Stock is trading at 40 times about earnings. Yes, this year they will get a few more GE engines, so they'll be able to sell a few more planes. So maybe the top line will grow by 15% odd. But given its growth of 15% in profitability and a 40 times earnings, doesn't justify re-rating of the stock. So difficult for me to say 5,500 is likely in 2 years' time also. Ideally, I would book profits. If it comes to 3,500 or below, that's the time I'd look to buy.
Got that view, Samir. But the next question coming in from E. Venkatraman, who's a senior citizen and also the regular viewer of the show. So thanks so much for sending in your query time and again, Mr. Venkatraman. This time today, he wants to know about JBM Auto. He's bought shares at 742. So currently sitting in a loss for his 62 shares, asking what he should do, Samir. And this question is directed towards you from him. If not an active coverage, is there anything on the electric bus segment that you like, Samir, now?
So I was going to say that, I don't have JBM undercover, but the question is very apt. Should you hold on to it? Absolutely, you can hold on to this space. I think the government push that's going to come on electrification of vehicles, especially when it comes to public transportation, which they can control, is going to be phenomenal. So all the companies, Electra, Green Tech, you're going to have an Ashok Leyland who will benefit from its subsidiary. You will have Tata Motors benefiting. CV, that is. So the entire space is going to do really well. If I had to make one pick in that space, given where valuations and where growth stands, I think Tata Motors CV would be the one. The second one, which I think has a lot of operating leverage that can play out and growth opportunity, is Electra Green Tech. It's trading at about $1,300. If you look at the numbers and valuations, you'll think this is absurd. But if you look at the operating leverage and the scale that they can produce at going forward and the orders that they have, I think then you will probably see some rationality and you will see where the stock can probably move up to over the next 2-3 years.
Got that view, Samir, and thanks so much for the detailed answer across spaces on the electric bus segment. Hopefully that answers your question, Mr. Venkatraman. But go across to another caller from Vishakhapatnam, and Aparna has a stock query for us. Aparna, very good morning. Welcome to the show. What's your query?
Very good morning to all of you, sir. I wanted to buy Angel One, sir. So
okay.
What is the, still Q4 results are good. So what is the support and resistance?
We actually just took this query, I think, and from Devin, I think he's recommended a view also as well. But I think, wasn't your query on Apollo Tyres, Aparna?
Yeah, I'm having both, sir.
Both sides, okay. So you want, okay,
I'm
got
having
it.
Apollo Tyres at 500 quantity.
Okay, so you're throwing us a googly at this point of time. Got that view, Aparna. But any chance, Samir, that you saw the results of Apollo Tyres by any chance? Because yesterday Of course, the con call is yet to happen, but a decent set of numbers, got some tax right back, and I think that's why. But any view that you have, they're continuing the momentum from the previous quarter?
Yeah, I did see the numbers, and you're right. There are some exceptional items which has given a boost to the profitability. But look, we are very positive on the tire space overall, for the simple reason that we believe that the vehicle industry in India over the next 5 years is going to grow at least 10 to 12% CAGR, right? You might get lumpiness, a couple quarters down, maybe 1 year no growth, next year 20%. But we feel that it is going to have a 10 to 12% CAGR growth. Now, every vehicle that sells, whether it's EV, whether it's internal combustion engine, whatever it is, needs tires and then the replacement of it. And Apollo has got good tie-ups with OEMs, plus they've got doing very well in the replacement market. In the short term, in the very short term, yes, now next quarter numbers are going to be poor across the board because certain raw material prices, when it comes to carbon black and all, will see an uptick because of the crude price increase. They may be able to pass on some of it in the secondary market, but not probably all of it to the OEMs. So you'll see certain squeezing in margins, but when things normalize, you'll see the stocks going up. So for me, any correction after Q1, Q2 would be buying for both Apollo, actually all three, CEAT, Apollo and MRF. All three we like from a long-term perspective, but buy on dips because the next quarter is not going to be good.
All right, so that's the view coming in on, of course, Apollo Tyres. The next one that we have is on Balaji Amines. Our viewer Rajesh Maheshwari from Indore says that he's holding 85 odd shares, an average price of 2485. Wants to know as to what's the short to medium term outlook for this one. How much steam is left more in terms of where this counter goes? Of course, Q4 did see a good number coming in overall when it comes to revenue growth also.
Locked in upper circuit also yesterday
and was largely driven by higher commodity prices. But and this also gives cues for other companies as well. But Deven, your view on Balaji Amines as to whether what charts are indicating one thing and whether there is more steam left or not?
Yeah, definitely. So Balaji Amines have corrected a lot, and we have seen a good reversal kind of a setup from the lower levels of 990 levels, and currently it is trading at 1600 levels. So I think this can be holded with a trailing stop loss. I think recently from last 2-3 days we have seen a good up move in this counter. So stop loss remains far from current market price at 1330 levels. We have a strong support at that levels. So I think one can hold this particular counter at with a stop loss of 1330. As buy price very high, I'll just recommend to hold and not to exit at this price. We can see some further up move in this counter towards 1820 levels. So that is the view on Balaji Amines.
Okay, Samir, I saw you smiling there. Any view on Balaji Amines? Because largely it was driven by pricing action. Volumes were not very great; they were stable, right? So any view on Balaji Amines?
So volumes will be stable, given that there's always some issues when it comes to raw material. When you have a lot of the raw materials are crude based, right? So obviously volume. Now, why am I very positive? I don't know if the viewer probably or whoever's asked the question has gone through the annual report. They're setting up a plant for 100,000 tons, which is a replacement for LPG, which is expected to get commissioned, I think, sometime this year. I don't know the exact date. But once that gets commissioned, and if LPG prices remain high, then this becomes a direct benefit for replacement of that. And this is something that the government of India is going to focus on again. How do you replace the import of LPG? And if using certain chemicals, they can help reduce that, I think companies like this will get a massive leg up over a long term. I'm very positive on this counter. We've been for some time. We are invested, disclaimer, we are invested in this company. And we think the next 2 to 3 years, you'll see Balaji Amines do really well. I mean, that's our personal view, which is why we've invested.
Got that view, Samir, and thanks so much for that answer as well. The next question on Translate Lighting. Rajiv from Delhi wants a 6-month view on the stock. Devin, what would you recommend?
Sorry, I do not track this particular counter, so I will not be able to give any view.
Samir, by any chance, any view on Translate Lighting?
Sorry, this one even we don't track.
Okay, no worries. Let me take the next question then, and hopefully Rajiv, we can probably take your question in the afternoon edition if you let us. It's on Yes Bank, actually bought 2,100 shares at 25, and this is Ramesh from Bangalore. And his question being what he should do with this counter as well. Sameer, I think you are one of those contra plays where you like Yes Bank for the very long term. But how long do you expect him, or would you recommend him to hold on to Yes Bank, given that the current landscape also has some interesting valuations for the private banks, right?
So if you were to look at it independently, some of the other private banks probably have a quicker run-up, smaller equity to service, less of problems. But if you look at Yes Bank by itself, we remain very positive. I think I'd spoken on, I'm not sure on your channel or any other, where I said in 3 to 4 years, I think the stock can easily double from these levels. So 20 becoming 40, right? The simple reason is there are recoveries happening, which will help them in shoring up more capital. They have new promoters, which is going to allow them to borrow costs at borrow money at cheaper rates, which will allow them to be more competitive, driving then net interest income and net interest margins. Once the company is able to lend and lever their branch network, you will see the two basic levers is one is cost of capital coming down, and the second one is the OPEX cost. So they are at 70% right now. What we see with other banks is they are down at 45, 50%. So we have that 20% leeway over the next 3 years. So once that starts playing out in a bigger way and they start sweating their branches better, I think what you will see is the re-rating happening in the stock. So from that perspective, I say hold on, I'm very positive. If you look at it in isolation, today IndusInd Bank probably throws in a better buying opportunity because they can quickly grow their NIMs because of the return of the microfinance industry. So short term, maybe this one, IndusInd will do better. Longer term, I think maybe Yes Bank will be better. So it's all a play on how long you want to stay invested.
Okay, all right. So that's the view coming on Yes Bank. But, just on the Transrail lighting query, I was just seeing the charts and probably it's formed a double bottom already. And, from here on, we'll have to see as to how the trajectory fares. So, of course, we'll try to take your question from our analyst at 2 p.m. also. So, requesting you to come back then as well. But I think we've got Prashant, who's been trying to call us since quite some time now. It's finally patched it after 19 odd calls on WhatsApp. Prashant, if you want to call us, don't call us on WhatsApp. Call us on the phone line that keeps flashing on our screen up there. But go ahead, ask your question.
Thanks, Mahima. This is maybe the 22nd line, and lucky enough for me to be connected.
Yeah.
So, Sameer, big fan of yours, and I like the analysis that you do on power. So, I have a very fundamental question to you, and I want to learn also a little more from you on this. So, till when do you see these power stocks movement upward? Is it cyclical in nature, or is this a very time-bound, or we're going to see that for a longer time? That's my first question. The second is, I have analyzed all the green stocks, and every other stocks companies are under huge debt, and their ROE and ROC are ranging between 5 to 10%, right? And does this mean that if they don't meet the typical gold standard of 20 ROC, ROE numbers above upwards? So does that mean that we have to look at the future ROE and ROC potential for this? And what's your favorite in the green that you have? The third on BESS, what are you tracking? Is there one stock that you would suggest in that area?
Okay, worth the wait, Prashant, the long question that you asked us, but I'll take this up with Sameer for sure. Sameer, he asked 3 questions, but your overall outlook on power.
Before Sameer starts answering, why do I feel that there is that one stock name that might come up in the picture? But
I was really trying hard not to take that name.
But Sameer, please go ahead.
Yeah, so luckily this is a space I know, but Mahima, next time I'm stuck, I'm definitely trying sending back a technical call to you since you starts.
Sure.
Having said that, yes, first of all, thank you for the kind words. Yes, I remain very positive. And you asked, is it a structural or cyclical play? I'm saying for the next 5 to 7 years, it's a structural play, right, on the power sector. I think there's going to be huge investments made in India, and that is all going to reap benefits. Now, your question is very good in the sense that should we look at ROEs and ROCs of the future or right now? So, you obviously have to focus on the future ROE and ROCE. because a lot of these companies are in investment phase, especially when you look at green energy. Now, I'll just give you some examples like KPI Green, who's setting up all of these power plants for IP. All of that is capital being deployed, but not spitting out any money at this point of time. So obviously the ROCE looks subdued, right? And once they start spitting out money and start generating profitability, then obviously the ROCE and ROEs will move up. So you have to focus on what is going to be something down 3 to 5 years down the line. Yes, I am very positive. And since you asked the question of which is the stocks that I do like in the space, so I'll instead of giving names, what I'll give you is I like companies that do not have excessive exposure to cell manufacturing, or I'm not cell into panel manufacturing. For the simple reason, I feel there's going to be an overcapacity on that side, but there's not going to be an overcapacity when it comes to people who are doing IP and setting up the projects. Because I think India needs for the next 5 years, and then forget India. I think globally, be it Africa, be it the Middle East, everywhere you're going to see this market opening up, and Indian companies are going to be able to do their development because of their past history in those places. So that is a space I'm very positive. And then when you look at green energy as an overall, when you have all of this setup happening, you need to distribute it and get it to the end consumer. So companies that are in the entire distribution vertical, we don't talk about those enough. But I think those are companies that are going to probably also benefit, like something like a KEC International. It's trading at 20 times. They do these setups of distribution networks. Q Power is a stock that was discussed on the channel. It's expensive on valuation, 45 times. But again, growth is going to come. Why are people willing to pay 40, 45 times for stocks like this? Is because they know the growth is there and the ROCE and ROEs will come. So I think it's a structural play for the next 5 to 7 years. So be invested in it and look at companies that can generate at the end of 3 to 4 years ROEs and ROCs are about 15 to 20%. And I think you'll find plenty of them that will do that.
Okay, all right, Samir, thank you so much for that comprehensive answer. Prashant, I hope, it was worth calling us for 22 times and getting that, wonderful answer. But time for our rapid fire round. Deven as well as Samir, try to keep your answers as short as possible. The first one is on Bajaj Holdings, bought at the levels of 12,300. Harsha wants to know whether to hold or sell from a short-term perspective. Deven, your view on the charts?
I think this stock can be holded with a stop loss of 9950 level.
Kishore from Hyderabad is planning to buy Zaggle for the long term. Samir, should he do that after a 26% correction over the last 2 days?
So unfortunately, no coverage.
Okay, Zaggle, Vishal Megamart from a medium-term perspective, 300 shares is what Gaurav from Bengaluru is holding at the price of 120. Your view on the charts, Deven?
I think one can hold with a stop loss of around 116 for the target of 126 and 130 level.
Ramesh from Chennai wants to know about Schaeffler. He bought shares at 3915. Deven wants to know if he should continue to hold or book out right now.
I think one should try to book profits right now.
Okay, Neeraj from Faridabad wants to know if he can continue to hold Bank of Baroda that he's bought, I think, at the level of 270. Samir, any view?
Yeah, very positive. Hold on. I think the stock will do well.
Amit Murkate wants to know about, IOC bought at 137 with the price hike also results on Monday. Samir, what should he do is his question.
So I have told you my view on this space, not very positive. I would avoid them.
Okay, Jupiter Wagons, Texmaco Rail, which one is a better bet for the next 3 to 5 years? Varun from Hyderabad wants to know. Samir?
Which were the two stocks?
Texmaco Rail as well as Jupiter Wagons.
So between them, Texmaco Rails, but Titagra Rails is a top pick in the space.
Okay.
MTAR Tech, bought by Bindu from Hyderabad, wants to know if it's a good long-term bet. Samir, any view by any chance?
No view on this one, sorry.
Okay, NIIT Learning Systems, a small cap stock. Deven, our viewer is holding 1,400 shares at the levels of 287. Yesterday was buzzing on the back of numbers. Your view on the charts?
I think one should try to exit on bounce. The structure remains weak.
On BSC, Deven, our viewer Harsh has bought it at 3,817. Should he hold or sell?
I think overall structure remains positive. One can hold with a stop loss of 3,840 levels.
Okay, Venkatapati is holding 20 shares of IRCTC at an average price of 537. Can you continue to hold this from a time period of 2 years, Samir?
Oh, absolutely. Please hold on to it. I think it's a monopoly business which will do really well.
Reenu from Bangalore holds Bata at 978. Should she hold for the next 2 years, Samir?
Average it, buy some more.
IDFC First Bank, what's the next target on the charts? So, Divya is holding 500 shares at the levels of 73. David?
I think the structure remains weak. One should try to exit on bounce towards 71 levels. It has a strong resistance at that level. Support is placed at 66.
All right. Okay. That brings us to the end of course, this rapid fire round. Samir as well as Deven, thank you so much for taking out the time and helping us answer all those stock-related queries. But viewers, completely out of time on this edition of Fast Profit. But do stay tuned because Know Your Company is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies with good news flows. And right now earnings season is also on. So I'm picking a company where a good set of earnings have come. But I'm not going to give you the company's name so fast. Try to guess it. It's easy for you. It's a Navratna CPSE registered company as an NBFC IFC. That means this is a public sector company. Of course, it's a rare chance to get that in KYC, but we have got this for you because the company has delivered a strong quarterly numbers. And did you know, in the last 5 years, the company has given 5 times return. That is where my interest has come in. Market cap zyada hai, but try to guess which company I'm talking about. The company in focus is HUDCO. That's the company which we talk about, and what are the key details about it, we'll try to understand. But why are we calling this company? It's a large company, but there is a lot of interest in it, and that is why I have got this company. First and foremost, the numbers have been strong. Will this momentum continue in the first quarter? That's the first question to be asked. The second question, FY27 outlook. लोन डिसबर्समेंट्स क्या रहेगा, AUM की क्या टारगेट है, वो सारे डिटेल्स हम यहाँ लेके आएंगे. Also NIMS guidance, is it under a little bit pressure? Is it going to bottom out from here, or will the NIMS remain under stress? Also the AUM shifting, is it shifting towards the high yield products? If yes, will the operational numbers change? The profile of the company, will that change or not? the key recovery expectations coming in the coming quarter. बहुत सारे cases में, बहुत सारे tribunals में पैसे फंसे रहते, तो किस तरह वापस आता है? So just to put that in perspective, and the key growth triggers, especially for urban invest window, the public-private partnership project finance, and the bridge loan. These are the new venues of growth for the company, and the signing of the large MOUs, especially with the state governments. What are the key progress looking like? And if the management can share some numbers with us. So these are the key questions we'll be asking the management. And joining us, we'll have Sanjay Kulshrestha. He's the chairman and MD of HUDCO, where he'll answer all our queries. But apart from this, let's talk about the company. ये company करती क्या है? When you speak about HUDCO, it's largely a financing company, but it does, of course, it is a Navratna. It's a high status Navratna, and when you are a Navratna, your cost of borrowing becomes lower. We have seen that in PFC, RAC, IREDA as well. It's a public financial institution providing consultancy and capacity building support. And of course, the financing is one of the major aspects of it, and this is the entire landscape. You know, जब घर आता है या infra बनता है, be it public or private, that is where they come in. But remember, most of the loans they are giving is to the government entities itself. Also, let's look at the other key reasons where the government initiatives is something which HUDCO should be in focus on. We have PMA 2.0, Smart City, Amrut, Swachh Bharat, and even Jal Jeevan Mission. So इन सारे initiatives को जो funding आती है, वो ये company भी करती है. HUDCO is known for that. Also, let's talk about the other key aspects. 99% of portfolio is for the government, central ho या state ho. This is where it matters. Apart from these numbers, if you look at it, the overall loan portfolio that stands at almost 1.162 lakh crore rupees, you know, going ahead, and they are targeting for FY30 almost 3 lakh crore. But how the loan portfolio actually comes in, the urban infra, that is 89% of it, and of course the usual affordable housing is still 11%. So 89% of the loan is still in the urban infra segment. Apart from this loan portfolio, let's see how the dividend payout ratio has come out. This is a very interesting data which was shared by the company. In FY23, there was around 38.5% of the dividend payout ratio. But look at it, for the shareholders, and generally PSU companies dividend dete hain, and now it's at the higher side. So that is a good signal for this dividend payout ratio. Return on assets, I've just taken FY25-26. There's a minor, you know, downtick coming in here, but largely it is very stable. ROC also, the story remains the same, and this is what the numbers are looking like. Also, apart from these numbers which are there, the operational indicators, this is very much important to have a look. The cost of funds that has actually come down, और ये बेहतर होता है जब आप एक फाइनेंसिंग कंपनी होती है और आपका जो cost of funds है वो कम होता है, then your spreads or yields actually become much better. Interest spreads have a slight decline is there, and the pressure which I was talking about, the net interest margin was 3.22% in FY25, and in FY26 it's down to 2.91%. So this is where the fall has happened. This is something you should be looking out for. So it's a neutral rating, but there are some key triggers also you should be looking at. The company has strong return, operational and credit ratios. This is to simplify it for you for your analysis. The NIM compression is definitely there. So we'll try to ask the management, is the worst over? Apart from this also, there are a couple of triggers you should know. There's a strong growth outlook for both AUM and the disbursement. So these are all, of course, the operational numbers which you should be tracking, but the trigger is positive. And the Urban Challenge Fund, that's around 1 lakh crore rupees for the next 5 years. That is something to look at. And also the city economic region and the bridge loans. These are the emerging areas where the focus is coming. So net, these are the positive triggers coming in for HUDCO. But let's try to understand in the KYC segment, what are the key parameters where we judge the company. And this time remember, ये एक financing company है, तो parameters change हुए हैं. There is income statement. There is of course operational parameters. I have of course not kept the balance sheet because generally these companies balance sheet is very stable. So आपको कुछ ज़्यादा नहीं सीखने मिलेगा. लेकिन ज़्यादा कहाँ से सीखने मिलेगा? ये नए ratios से. That's why I have tweaked it. Cost of borrowing is there, asset quality is there. These four is something which is main for the numbers. But apart from that, our usual parameters are there. Shareholding, it's largely 75% owned by the government. There's no major sell-off there, so it's very stable. Street cred, we'll try to understand how much return has been made, and of course on the long-term basis also we'll try to figure out. Valuations, we'll have a 5-year view on it. Average and peak numbers we'll talk about, and of course the outlook, very much important going ahead. What are the key numbers to watch out for, and where is the direction going for the company? We will be focusing on that. But let's talk about the first rating parameter, and that's the income statement. And largely we see the interest income and PAT, these numbers have improved. Okay, we have done it in FY24, 25, 26. So while you're looking at the screen, you should be looking down from top to bottom, and this is where the growth is coming. Interest income and even PAT, that has almost doubled up in last 2 years itself. So good strength is coming in, and I had explained you that the Q4 numbers were also on the stronger side. So net, the income statement is looking strong. So I'm going to give this a strong thumbs up. Let's talk about the operational parameters, how things change. And यहाँ पे loan sanction और disbursement बहुत important होता है ना. Over here also, while you're studying, see from top, then come down. Look at that, this has almost doubled up the loan sanction. So that is, we are seeing, a good momentum happening. And for loan disbursements also, this has gone up almost 3 times. So loan disbursement 3 times, loan sanction 2 times. That is where we are seeing a good operational parameter jump as well. But net, let's give this a neutral rating right now, because this is the entire, you could say, the business cycle of it. So अब धीरे-धीरे करके आप business समझने लगे हैं KYC में इस PSU के ऊपर. But what's the third category? That's also important, and this is the overall cost of borrowing. This is very much important. This was 7.44%, and because it is having a good strong credit rating and it's a Navratna, the cost of borrowing keeps coming down, and this is what we had explained you, and this augurs well for a lot of financing companies which are there from the government, and that is why I'm going to give this a strong thumbs up as well. But moving on, the incremental cost of borrowing, that has also come down, so that's what we are going to talk about. But one thing is important is the next one, that's the asset quality. This is very much important when you are judging a company in the financing space, and lower this ratio, it is better it is. So look at that in FY24, this went up to almost 3%, but then there was a fall happening. FY25 1.7, और अभी का ratio देखें तो just 1. This is the GNPA ratio. Let's talk about the NNPA ratio. The story remains the same. It's largely, you could say, the net NPA ratio is almost 0. That means asset quality is quite strong. Recoveries are definitely a question to be asked, but the asset quality में company को अव्वल नंबर मिलता है, and that's why I'm going to give this a strong thumbs up as well. Apart from this, let's talk about the street cred. The shareholding, and that's something we'll talk about. I had mentioned you earlier that 75% of the stake is by the government of India. So promoter hai government of India, and interestingly it's under the name of the President of India. This is just a did you know for you. FIs, DIs, let's look at how things have moved. FIs haven't moved much, and neither the DIs. It's very strengthened, you could say, very important kind of announcement is definitely there, that there is no major change happening. And remember, in the DIs, 7% stake is held by LIC. Public also, nothing has moved much. So I'm going to give this a neutral rating right now, because कोई change ही नहीं हुआ है. Let's also talk about street cred, how things have moved. And I mentioned you earlier, and I teased you also, that the stock has given 5 times return in the last 5 years. That's a multi-bagger for you. Congratulations if you're holding that. But from the March lows itself also, we have a look. The stock is up almost 40%. एक साल के लिए आपने अगर स्टॉक को रखा है तो फ्लैट है. Overall, if you are a mid-term investor or even a long-term investor, congratulations, you have made money in this stock. But let's give it more time, because the last 1 year the stock has been flat, and if you are doing the technicals of it, you can see on a monthly basis the stock hasn't given much of a breakout. So it's a neutral rating when it comes to the street cred. Let's go for the valuations. The valuations I'm tracking is the 12-month forward price to book ratio, and let's look at it how things have panned out. पिछले 5 साल का peak में देखें तो it was 3.4 times, and currently the current levels as well as the 5-year average levels, they are full side by side, largely flattish, almost 2 you can talk about. So there isn't much value left. It's very in line with its average, so it's not very cheap also, neither it's very expensive also. And when this situation happens, I give a neutral rating to the valuations. Let's talk about outlook, and that is where I feel there is some alpha to be made. They are targeting 3 lakh crore balance sheet by FY30. Right now they're halfway there. 1.61 lakh crore has been achieved yet. Also, the second outlook to look is the strong growth outlook for the loan disbursements. That is where the bullishness is coming from the management in their investor presentation. Also, they're targeting zero net NPA, and हमने आपको दिखा भी दिया था कि net NPA has largely reached that levels as well. They're strengthening the international borrowing and partnerships as well. They have a lot of borrowings from, you could say, from the Japanese segments as well, where the cost of interest is on the lower side. Remember, a company like this makes money when their cost of interest is less and they give it out at the market rates, and that is where they earn their spreads. Now they're raising funds through Section 54 EC capital gains bond, and remember there's a tax exemption at play here, and that is what we are seeing the entire picture. So net the outlook is positive, but let's see ratings क्या है इस company के बारे में. Of course, this is a proper regulated organization, but we'll try to figure out, what are the standout ratings in our KYC show. Income statement, Q4 numbers were pretty strong. Operational parameters were very decent, but of course that NIM segment is there. That is where a little pressure is there, and that is why I've given this a neutral rating. But be it cost of borrowing or even asset quality, that is A class, and because of that I have given a strong thumbs up. Shareholding, there isn't much change happening. It's a government-owned company, and street cred, of course, for medium-term investors, it's been flat. Short-term investors, it has done well from the March lows, and for the last 5 years, it's been a multi-bag of 5 times returns coming in. So I've given a neutral rating there. Valuations in line with their 5-year average price to book ratio, and lastly the outlook, that is where the street is getting bullish. So total KYC rating kya hai? Let's talk about that. That is 6 out of 8. I'm talking about, and it's largely on the higher side of the average numbers we generally give for a company. But to understand more, we'll try to have a chat with the management. Sanjay Kulshrestha, he's the CMD of HUDCO. He will be joining us. An interesting snippet about him. He has been the CMD since October 2023 with more than 17 years of, you could say, experience. Actually, 3 decades of experience coming in infra power generation and more than 17 years as an experienced professional in REC as well. REC bhi ek jo hai PSU hai. Now he's taking that experience and coming in this company as well. But to have this conversation, we'll take a quick break, and on the side, Sanjay Jay will answer our queries.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to KYC, and now we are joined in by Sanjay Kulshrestha. He's the chairman and MD at HUDCO, and company has come out with a strong set of Q4 numbers. To start with, what led to this growth, and of course, will this momentum continue in the first quarter as well?
Thank you, Sharath. I think you have done a great analysis, and I was going through the analytical part, and it was very nice to look at the third-party analysis, and thank you so much for inviting me. If you see, the growth of the company is sustaining from last 3 years continually. It is only because of the push of Viksit Bharat from the government of India and the support, not only the financial support which is coming out, not only from the capital expenditure from the budget, but the Urban Challenge Fund, the Amrit, the Swachh Bharat Mission, PMAY, Jal Jeevan Mission, roads, ports, airport, satellite towns. So a lot of policies are in place, legislative changes, whatever is required has already been done. Then the reforms and the lot of push is there from the government of India, and it is well accepted by the state governments. And you may have seen that every state is coming with the kind of, say, you can say Swarnim state or Viksit state. That kind of programs are there within the states, and these programs are backed by the projects. And these projects are in entire state, starting from the ULBs, and now the Urban Challenge Fund is there, which have an objective to make the cities livable, to make the cities as a growth hub. So what it means is that we will be identifying the assets within that ULB only, and we will be creating a bankable project. So,
fair enough.
So I think a lot of potential is there, a lot of headwind is there, and a lot of support and acceptance is there.
Sanjay ji, let's talk about a little bit about the internals also. And I was just understanding that NIMS, there seems to be a little bit of pressure here. When do you think will this bottom out, or do you think this will stay?
Yeah, I think we have a philosophy that it's a profit making with a social objective, and we are keeping that objective remains same. We had guided to the market that our NIMs will be between 3 to 3.2%. This time it has just slightly reduced, but it is only because of the pace of the growth. We are growing at around 28-29% in the loan book. Our loan book is doubled in last 3 years. So whenever such kind of growth comes to any of the organization, any of the financial companies, there is a slight pressure, which is a temporary one in the NIMs. So that has been reflected. But at the same time, as you have also analyzed, we had been able to cut down our cost of funds. So it's a temporary phenomena. It will be rest at around 3 to 3.2%. And I think from next quarter, you may see such kind of changes.
Right. That means from the next quarter itself, NIMs are expected to bottom out. That's an interesting take coming in. But loan disbursements and AUM, over here itself, if you look at it, there has been a good up move in the last 3 years. We have shown that in KYC with all our analysis. But what's the outlook ahead going like? For FY30, you have given a target of 1 lakh crore. Is there any other targets which are there long-term basis for HUDCO?
So for FY30, the target is 3 lakh crores. We are presently at 1.6 lakh crores. And if you see the track record also, we are continuously achieving our targets. And with all our homework and with all our sanctions and the implementation of the project and the pace of the project, I am very sure that by 2030, we will be achieving 3 lakh crores of the loan books. So I don't see any issue in that. And second target is the net zero NPA. As you may have rightly pointed out, we are nearing zero, but not zero. But we are trying hard to become exact zero, absolute zero. And we have a pursuit that there will not be any default in the projects that we will be sanctioning. So whatever we are disbursing. So there is no new NPA which is being created. The monitoring is very, very strong. The due diligence is very, very rigid. Then only the sanctioning process is
right. And Sanjay ji, just wanted to understand how the AUM changes. Are you moving towards the high yield products? And if yes, any timelines for it, and what are these products?
Yeah, high yield is there since we are starting the PPP projects also from the 5 sectors. Actually, we had identified these 5 sectors as per the requirement of the states and as per the objectives of the government of India, like road, ports, airport, real estate, and energy transition. It is in line with the national objective. So only objectivity for selection of the project is the good entities, good investment grade entities, and good projects. So I am very sure that our NIMs will be slightly higher on this part. But if you see the proportion of the private sector, it may not be high initially. So we will be very selective in these projects. So overall, it may not impact the total NIM guidance of between 3 to 2.2%. But yes, from these projects in initial phase, when the construction is going on, the returns will be slightly higher.
Okay. So that's the entire view coming in. But let's talk a little bit about the recoveries. I know last time conversation we had in KYC as well, around 4 to 5 months, where you had there were like around 10 odd projects. So right now, how much recoveries are there expected to come in, and any timeline, if you can just quantify that?
So last year we had resolved around 11 assets, and we had received around more than 400 crores or so. This year, out of 1,600 odd crores of the NPA, around 1,100 odd crores are in the different stages under the NCLT, and most of them has received the order, some of them under liquidation. So it's a legal process and the procedure which is going on. So there is no set timeline from my side, but we are aggressively trying to resolve and get our money back. And out of 1,600, we are targeting that at least 500 should be settled during this financial year. But we will keep on reviewing this number.
Right. 500 is something which you're expecting from that 1,600 crore of amount. And of course, with the timeline, we'll talk about that. But speaking of timeline, Sanjay ji, give me the timeline for the large MOU signings with the state governments. Interestingly, state elections are also over. Anything we can expect, especially from, say, like a West Bengal or an Assam? Just wanted to get your views on that.
We have started our work on that, and it may be MOU or it may be direct sanction of the project also.
And which states are these? If you could just give us a flavor.
I think there are a lot of states, so I will not divulge into the details because the discussions are still going on.
Okay.
But very soon we will be announcing to the market.
Okay, so soon you will be announcing some good, important long-term MOUs with the state governments. Of course, the state elections are also over. But also, Sanjay ji, give me a little bit of flavor about the growth triggers on the urban invest window. There is a PPP project finance and also bridge loan and urban challenge fund. These are something which very bullish, bullishness sentiment is coming for this company. So how do you take this, and is this a long-term 4 to 5 year story, or how is it actually panning out?
Yeah, I think this is the most relevant question because in HUDCO, we are trying to repurpose the company. The way we were working only as a lending institution, now we are adding value to our projects. We are funding outcome-based kind of projects. So the Urban Challenge Fund, it's not 1 lakh crore, it's actually 4 lakh crores. 1 lakh crore is the subsidy amount which the government of India will be extending to the states for ULBs and the urban transformation. So it's a 25% subsidy from the government of India, and another 1 lakh crores has to be arranged by the state government. So that is 25% and 50% project. The balance 50%, they have to create a bankable project. With this perspective, under this repurposing initiative, we had launched the Urban Invest Window. It is under guidance of MAUA. We had launched this. Here, there are 3 objectives of this Urban Invest Window, which are long-term, you can say. Initially, we are starting with creation of the project under UCF, that is Urban Challenge Fund. We will be identifying the assets. We will be analyzing the accounts, income, expenditure, profit, loss of the ULB, rating of these ULBs, and creating a bankable project. It may be a riverfront, it may be water, sanitation, hygiene. All these kind of projects will be developed.
Fair enough. Right, sir. We are running out of time, but it's always a pleasure to have you, Sanjay ji, with us and giving views on the company, the growth outlook, and also clearing some doubts on the NIMs and the operational way. It's always a pleasure to talk with you. So that's the management of HUDCO speaking about the operational growth parameters, and of course they have mentioned that the NIMs might bottom out from the next quarter as well. Of course, the stock has run up, so a little bit of profit booking is there. But for more interesting stories like this, keep watching NDTV Profit and your favorite KYC show.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
US President Donald Trump is wrapping up his Beijing visit on a strong note, calling it incredible, with major trade wins and a very strong personal bond with Xi Jinping, while the two leaders head into a final round of talks to close the summit. Benchmarks on Dalal Street gives up early gains, with the Nifty close to 23,700. Sectoral picture remains mixed, with IT and FMCG leading the gains, while real estate drags. Fuel prices jump at the pump, spelling trouble for the households, with petrol and diesel prices hiked by 3 rupees per litre. This is the first hike in petrol and diesel since April 2022, with premium variants of both petrol and diesel also climbing higher. Tata Motors posted a Q4 beat at the consolidated level, supported by strong India PV growth. But pressures really continue at JLR with volumes down and multiple headwinds still weighing on the performance. Big relief coming in for Adani Group, settles US SEC civil complaint with a request for a final judgment request. All eyes on the US court order that could drop charges against Adani later this week. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take you through the market. Little suppressed in trade at the current moment. Nifty 50 in the last 1 hour of trade, exactly from 11 a.m. has lost a lot of ground and getting comfortable at those levels. Still with a tinge of green there on the screens. Let's take a look at what all is really working and not working for the markets today. Well, it's the IT index which has been seeing consolidation, which has been seeing pressure points, but today and on an odd day it's 1.7% up, a huge outperformance in the market really being shown. Banks are the ones which are trending like Nifty 50 has really taken the lead in terms of giving, in terms of paring down the gains for Nifty 50 as well. So take a look at that particular segment and also taking a look at what's really working in terms of the contribution chart for Nifty 50. It is Infosys from the IT pack which is gaining the most. Out of the 40 odd points that are really gained by Nifty 50, almost all of it is coming in from two counters. Infosys from the IT pack and HDFC Bank from the banking. And Airtel, Bharti Airtel continues its momentum really after the results were announced. TCS, CIL also doing well. But it's Reliance Industries which is a key dragger in trade today, along with some of the metal names like Hindalco and the largest bank, State Bank of India. In terms of the sectors, taking a look at what's really working out in terms of the sector, it's the IT sector, the biggest outlier. FMCG and pharma have been doing well. But on the flip side, defense, remember, had really seen a lot of momentum in last few trading sessions. That's seeing some profit booking. Also, real estate is a drag and oil and gas space is a drag. Remember that petrol diesel hike finally is here and is seeing in the petrol pumps. That's a big move that is really coming in and an impact of the global tensions. All right, let's take it straight across to the top story that we are tracking, which is really bothering and impacting overall global trade as well as geopolitics. Donald Trump is striking an upbeat tone as his China visit really wraps up, calling it incredible with significant trade gains for both sides. Now, the US president says that Washington and Beijing are really aligned on key issues like Iran, insisting both countries want an end to the conflict and no nuclear weapons, while signaling also a push for deeper engagement, remember, ahead. Listen in to what he had to say.
We did discuss Iran. We feel very similar to Iran. We want that to end. And we don't want them to have a nuclear weapon. We want the straits open. We're closing it now. They closed it, then we closed it on top of them. But we want the straits open, and we want them to get it ended because it's a crazy thing. They're a little bit crazy, and that's no good. Can't have it. They cannot have a nuclear weapon.
All right, let's focus on the numbers as well and the impact of earnings. And big boy coming in from the auto space. Tata Motors passenger vehicles division reported a sharp decline in the Q4 profit, really shrinking by about 1/3 on a year-on-year basis. However, the revenues crossed the 1 lakh crore rupee mark for this particular quarter. All right, so that's the stock for you, up almost 6.5% in trade. Let's get chatting on the markets then. And Siddharth Vora, who's the head of Quant Investment Strategies and Fund Manager at PL Asset Management, joins in now. Siddharth, welcome to NDTV Profit. What do you make of the impact that Trump's visit to China and the way the optopolitics is really playing out between the two countries, the biggest economies, having an impact on global markets and Indian market sentiment?
So I think right now, given the market is headline-driven, macro-driven, crude-driven, any improvement in geopolitical tensions, improvement in dialogue between some of the major countries and economies will be a great step ahead in the right direction for global markets and sentiment overall. And I think US and China will definitely open up a lot of new opportunities going ahead. So I think it's a positive in the right direction.
Right. It's coming in as a positive news, but Siddharth, you will also appreciate that now the war impact is really troubling on the ground. There is inflation on several pockets already. Many of the companies have shown good revenue growth. Profits are there, but EBITDA margins being eaten up because of the inflation due to the war. And next quarter also looks a little bleak because of inflation. Putting all that into perspective and the fuel price rise, how would you really ascertain the move for Indian markets?
So I think this earnings season has been surprisingly much better than expected. If you look at earnings delivery for mid and small cap companies, they were far ahead of expectations in most pockets. It is a combination of volume-led, optimization-led, I would say efficiency-led, and even much better realizations for cyclicals. So we've seen operating leverage play out across many cyclical sectors. And this quarter is still not the painful quarter, to be honest, in terms of margin and cost impact. I think the next 2 quarters will see a little more pain in terms of margin and cost pressures as opposed to this quarter. This quarter has been significantly better from a breadth of earnings also. It is not dominated by few large caps or few select counters. I think 60-65% of companies have delivered earnings much better than expectation and across most counts. So I think earnings are looking constructive, but sentiment going ahead is still going to be fragile and volatile.
All right, going forward, fragile and volatile. And given that kind of an outlook, Siddharth, for the next few months, that is till the next earnings cycle is really announced. How do you see the market trajectory? And therefore, what should be the investment strategy, especially for the ones who are really putting in to work their hard-earned savings into the market?
So I think there are 3 major things that we think of in terms of our investment strategy and positioning. After staying overweight for large and large mid caps for roughly 15 to 16 months, we are finally tilting the portfolio and making it more small cap oriented. That is one big shift. The second shift is moving from a value and low volatility oriented approach to a growth oriented approach. Again, this is a major factor shift that we are making in our portfolios after 12 to 13 months. So since the last 1-2 months, we've started moving a bit towards growth once again after sticking to value for so long. The third part of the strategy would be how you approach sectors. So currently, we're doing a mix of exporters and cyclicals. So on the export side, we have the entire metals pack, which we are significantly overweight and continue to be so for the last more than 1 year now. Pharma is a defensive exporter. It has sector-specific tailwinds and it has some currency tailwinds as well because of INR depreciation. Other than that, we stay constructive on industrials, auto ancillaries, and power. These are the major themes in our portfolio right now. And the small and mid cap theme is very interesting because there are 5-6 quantitative factors that we look at to build this thesis on small and mid caps. Right. Of course, the growth differential, the return spreads between large and small caps say the cycle is finally turning after 2 years. From a valuation and growth adjusted valuation perspective also, small and mid caps are looking much more attractive than large caps right now.
Sure.
Yeah. So I think overall we are well positioned for a risk-on cycle from a 6 to 12-month perspective.
All right. Well encapsulated there, Siddharth Vora. And of course, very valid points there. But of course, only some of the companies or sectors that you mentioned, like metal, are really guiding for a better margin play in the next earnings cycle, while B2C remains very, very weak in terms of their outlook for the next quarter. Thank you so much for joining in with your perspective on the markets. All right, shifting gears to the earnings momentum, and this time it's coming in from the business trust side, and it's from InvIT. Harsh Shah, the MD of IndiGrid, joins in. Harsh, welcome to NDTV Profit. Always a pleasure to get chatting with you. First of all, in terms of the numbers play, how would you really assess the last quarter gone by, considering also that your EBITDA performance in terms of the margins, operational margins, has gone down by about 80 basis points?
Sure. Thanks, Nisha, for having us. I think last quarter and as well as the last year has been phenomenal for us. In general, we have not only delivered our DPU guidance of 16 rupees for this year, we've also been able to grow for subsequent year at 16.48, about 3% higher than the last year. And if you calculate a year before that, it was 6.7. So put together, just in 2 years, we've grown the DPU by almost 10%. I think this has happened largely on account of getting new projects. And what has changed versus the past is that part of the growth in the last year that has actually come in the cash flows is shown in the financial numbers as a growth. But also we have done a lot of investments for future, which is largely capability buildings and new projects that we have undertaken, which allows us to secure for growth for another 12,000 crores over the next 3 years. And that's what the additional cost that you see that we have invested in has marginally reduced our EBITDA a little bit. But I think beyond that minor blip on percentage, we have set ourselves for a stronger growth cycle over the next 3 years.
Right. So stronger growth cycle for 3 years and more commissioning to really, or expansion of the portfolio is also on the anvil. But if we really take a look at a short-term view, Harsh, and you've already crossed about half of this present quarter, how would you assess and guide on to the next quarterly results? And what are there any pain points also because of the inflationary pressure, because of the global geopolitical tension?
Sure. So I think we guide for a year. We already guided for this financial year that we are going to have 16.48 rupees of DPU. And that's something which is already baked in. And that's going to be the result for quarter one, that we have promised 3% higher DPU, so 4.1 rupees a unit, 4.12 rupees a unit that will be distributed in quarter one of this year. We don't see any challenges or immediate impact of global pressures on our business directly. Rather, we act as a hedge because we are a stable business, utility business, which has relatively limited impact of any immediate cost pressures. Certainly, if inflation continues to rise beyond control, eventually the cost of capital in the country can go up. And then that may have a marginal impact on that as we fund more projects and as we refinance. But having said so, I think we will be the least impacted of the lot, and from the other sectors, we will still remain a beacon of safety and stability. And that's what we are working for.
Right. When we talk about the BESS projects, Harsh, give us a sense. You have commissioned one of the largest BESS projects at single site. And what is the operational performance that will be baked in for that? Of course, that must be in your guidance for DPU as well. And what is the trajectory and the growth potential going forward?
Certainly, I think BESS is a very interesting business. We started it 3 years ago with a 250 kilowatt hour or 0.25 megawatt hour in one of our plants. Subsequently, we commissioned a project of 40 megawatt hour in Delhi with customer being BRPL, which has more than a year of operating history. And now we have commissioned one of the largest independent utility scale BESS, and that's about 360 megawatt hours. It's performing as planned. I would say performing better than what we had planned for. And currently, we have another 2 gigawatt under execution and we will see over next year those plants coming to fruition. So effectively, in a period of 3 years, we will have 0.25 megawatt to 2.5 gigawatt hour of size that we would have created in the country. All of it utility scale, and all of it, helping the grid stability and security for peak shaving and arbitrage applications.
Right. Harsh, your stock momentum is muted in trade today. And of course, we have seen that even though InvIT as a space has gained traction, but there is a lot more room for that to really expand. Being one of the industry leaders, give us a sense on the kind of distribution yields that are really trending for the company and the sector, and the trajectory forward. How do you see this really panning out? Because this is one of the pain points which the investors mention, if getting an uptick will also make InvITs much more popular.
Sure. So first of all, I don't think people should look at short-term returns. InvITs and REITs both are very long-term investment. They're stable investment because most of the income or the returns will be generated by earning yield. If we just look at our last 10 years of history, since including DPU, we have delivered 183% return since listing, and majority of it, 120% of it, has come only from distribution per unit, which stabilizes the volatility in the stock. Having said so, there is a lot of improvement and development in liquidity that has happened with the regulators and markets in general over the last few years, including, for example, we are included as part of FTSE index, which has driven a lot of liquidity. And just over the last 4 years, the liquidity is quadrupled or rather more in terms of just number of investors buying and selling, which allows better price discovery. And touch wood, we have seen a unilateral growth on the price as well as DPU over last 10 years. Industry-wise, I think there is a lot of proliferation of domestic institutional investors towards InvITs.
So Harsh, in terms of percentage and distribution yields, what are the trending figures, and do you see it increasing, and by how much in another year or probably 3 years, 1 to 3 years? Quick one at that.
I think the distribution should go up and distribution yield should come down. Right? That's the good part. If the distribution yields are widening, we are not performing as we would have hoped. We approximately InvITs are trading anywhere from 9 to 11% yield in terms of percentage yield, which is distribution promise divided by the price of the current trading unit. And REITs are trading somewhere between probably 5 to 7%. We hope that this continues, or even probably 1% of more margin compression takes place over a period of next 3 years. But in terms of growth, the distribution per unit should go up, and the yield should come down. That's what we aim towards. And as then more investors participate, we would see becoming more efficient.
All right, Harsh, thank you so much. Always a pleasure speaking to you. All the best.
Thank you.
All the best for the present quarter. Thank you. All right, top sources tell NDTV Profit that the government is shielding consumers from the full impact of rising global oil prices, with both the centre as well as the OMCs really absorbing nearly 1,000 crore rupees in losses every day. Shrimi joins in with all those details. Shrimi, tell us.
See, the government's message amid the global oil crisis is becoming increasingly clear. It does not want consumer to bear the full burden of rising crude prices through steep fuel price hike, and that is quite reflected in today's move. And according to top government sources, oil marketing companies along with the centre are currently absorbing losses of nearly 1,000 crore every day to keep petrol and diesel prices stable despite the surge in global crude prices. Now, under recoveries are estimated around 26 per litre on petrol and nearly 82 per litre on diesel. Officials argue that the alternative would be far more painful. Since fuel demand in India remains largely price inelastic, consumer would need petrol and diesel even if price rises sharply. Internal estimates suggest that the fully passing on the global shock could require fuel price hike of as much as 200 to 300%, and that's huge. Now, sources says that government believe that any knee-jerk move would hurt the bottom of the pyramid the most. Instead, the focus is on reducing fuel consumption volume rather than sharply increasing increasing the prices. Officials described the current situation as a massive twin drain, with crude import costing 12 to 15 lakh crore annually, while gold import have surged to 6 lakh crore. Sources also says that the government is framing the current situation as an external geopolitical shock linked to the Iran conflict rather than any sort of domestic economic failure. Now, this also explains clearly the PM repeated calls for restraint in fuel consumption, foreign travel, gold purchases, etc., which sources describe as highly targeted and pragmatic steps to sort of reduce the dollar outflows with minimal economic disruptions.
Right, Shrimi, very important developments there. Thank you so much for joining in. And on to the big earnings of the day. And Tata Motors passenger vehicle division reported a sharp decline in its Q4 profit, shrinking by about 1/3 on a YOY basis. However, the revenues crossed the 1 lakh crore rupees mark, and that's what probably the street is really reacting to, 6.5% or over 6% up in trade. Puneet tells us what's really working for Tata Motors PV business. Puneet.
Well, thank you for that. The other aspect about Tata Motors is actually, while the result has been decent and beaten estimates, there are some headwinds, and I think the market's looking past that at this point of time, because while the launch pipeline has been strong, the company has still yet to do a lot more on the cost side of things as well. So that is point number one. And the other aspect that the company has mentioned that they will be launching 3 new EVs in this year. A couple of them will be on the Range Rover electric side. They will now move into the Jaguar Type 1 as well. So new launch pipeline will come through. But the cost headwind continues. Q4 had negligible cost impact both for JLR and for the India business. But the company has said that 3.5% to 5% of revenue impact because of cost could be expected in Q1. So that is the first thing to watch out for. Second, I mentioned about FY26 being the base year. So whatever could go wrong has gone wrong in this year. They've lost production because of the cyber attack. And while that is behind, it makes a good base for the company going into FY26. So that's the second key point. And the third one that continues to be that brokerages have largely maintained their views. So Citi has a sell rating, they've maintained that view. So has Jefferies maintained and underperformed because there is a lot of uncertainty still. They've lost a lot of volumes in the US, which was the highest growth market over the last 2 to 3 years, but continues to be a tough one for the company going forward. I think what the market is cheering on today is that the estimates were so beaten down that they were at least a little better at this point of time. But also the fact that the India PV business continues to be on a very strong footing, 49% revenue growth for Tata Motors in India PV. But JLR continues to dominate, the majority of the revenue and the EBITDA. And hopefully by Q1 or Q2, you will see some more reprieve, some more information coming in. What's the expectation? Guidance still not given. Will be available in the Investor Day in June.
All right. Thank you so much, Puneet, and looking forward to that guidance in June as well. Now, after posting a mixed quarterly result with a stellar gold AUM growth, well, the company is really aiming an AUM growth guidance of 15% with yield at around 18 to 20%, says George Alexander, who's Muthoot's managing director of Muthoot Finance. While speaking to NDTV Profit, he shared those details. The stock after the result is down 7% in trade today.
Last year, we opened about 160 or 170 branches. This year, initially, we are planning for another 300 branches in Muthoot Finance. So OPEX for that, we can easily absorb the OPEX here because a company with such a large balance sheet, we can 5,000 branches we have in Muthoot Finance, another 300 branches, OPEX is just marginal. Now you're coming to Belstar. Belstar is not opening any microfinance branches. They are opening only gold loan branches. As of late, they have about 100 branches in there doing exclusively gold loan business, and they plan to open another 200, so maybe 300 plus branches by the end of the year, and probably do little more secured lending. That is about Belstar.
All right, so that's the earning reaction coming in. Let's take you through also which are the stocks to watch in trade today, which are really making news and should be on your radar. Shivam gets us the entire list. Shivam, what all counters really make it to your list today?
Well, yes, the first stock in the list today is Fujiyama Power Systems. The company has approved the proposal for enhancement of solar cell manufacturing capacity, and the proposed expansion will be of around 1.2 gigawatts of TOPCon solar cell manufacturing facility. Now, this forms a key part of their company's backward integration and also the technology upgradation strategy that the company is looking forward to go with. And secondly, the existing capacity utilization currently stands at around 65%, and the commercial operations of this new capacity expansion is going to be commissioned from Q4 of FY 26-27. Now, the estimated investment budget for this project will be around 350 crores, and the company aims at reducing the cost volatility, ensuring the time availability, and improving gross margins with this new capacity addition. Second stock is Precol, which has posted a strong Q4 numbers and has achieved a milestone of around 4,000 crores total income that the company has set the target in previous years. And if we talk about the revenue, that has been up around 43%. The net profit has also gone up to 73 crores versus 35 crores in a previous year. Now, apart from this, the board decisions has also includes the appointment of Vikram Mohan as the chairman of the board, who was earlier the managing director of the company. Also, they have appointed Madhura Mohan as an executive director. Now, third stock is the Kirloskar Oil Engines, and they have approved an announcement for manufacturing capacity.
Shivam, we'll have to repatch that line for later. It has some disturbance. But let's take a quick look at the market at the current moment before we wrap the show on markets at 12. And at the moment, Nifty 50, 23,740 odd levels that it's clocking. With that, it's a wrap on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the Jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se hone lage, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that इसमें सोना चांदी थोड़ी डाला है. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit market wall pit. He's not at the pit today, but with all the action there. Sharad, it's interesting to see what's happening with the markets right now. We have cooled off from the day's highest levels, and that tug of war does continue. There is no particular decisive trend that we are able to pick up this week as well.
Exactly. Good afternoon, Hiral. And you're right. Yesterday also that tug of war was there, especially on the Sensex expiry front. But of course, there was a sustained move. But that sustained move is coming down from the day's high level. Look at that. There is a fall happening. But yes, nevertheless, Nifty is still in the green. But we are near that flattish mark. Let's look at Nifty Bank, how things are panning out. And largely over here also we see the story remains the same. However, the technical setup of Nifty Bank is worse than Nifty. Also, let's look at the key triggers for you to watch out for. Of course, a lot of information was there in the morning. But remember, there's a range-bound movement happening with a positive bias around 150-200 points. That's the range we are seeing. Nifty immediate support is 23,500 to 23,600. Today, that bounce off has happened, and that is the level which we are talking about. Apart from this, the Nifty Bank support, that is around 53,600 to 54,000, and that 54,000 level just recently got broken down. So there is something more downtick coming for Nifty Bank. Short covering is coming in IT after 4 to 5 trading sessions of immense sell-off. And today we are seeing Nifty IT index also up more 1%. Sell-off continues in realty, metal and the PSU banking space, and most of the sectoral indices are down by more than 1%. Major asset classes right now, looking at how the global cues and even domestic cues are shifting, are still in a range bound right now. And apart from this, if you look at it, the rupee again hits its record low levels. VIX, no much major changes. The yield, they definitely went up as the the pricing hike was there for the fuels. It's advisable to have larger positions which are there. Avoid them at least for the next week going ahead, because you don't know what kind of developments can happen globally also, and domestically we might have some more announcements for the government coming in, the street is expecting. So overall, it's advisable to have lesser positions as we go into the next week.
Okay, so it's interesting to see what's panning in terms of markets. Let's just quickly pull up, the heat map in terms of individual sectors as well, to understand what that trend is looking like so far. If we can just have the sectoral heat map on the screen, because yesterday's session as well, the picture was slightly different. Today you have IT, which has actually bounced back in trade. FMCG also trading in the positive, but it's the defense pack, real estate pack, which is actually taking a beating. Metals also seeing some profit booking after that sharp surge that we've seen over the last couple of trading sessions. But moving on the watch list, Tata Motors passenger vehicles, it's interesting to see what's happened with the numbers. Q4 has been a beat, and there are headwinds when it comes to JLR, which has continued. Infosys, in fact, the entire IT pack is seeing a recovery in trade. Coal India also in focus on the back of good volumes. In fact, one of their subsidiaries, that's Bharat Coking Coal, also seeing some smart moves in today's day of trade. Adani group of companies on the back of the positive corporate development are in focus. Hindalco buzzing again on the back of volumes, strong numbers by Sheela Foam. There has been a large block deal in Nazara Tech as well. Pearl Global, again reacting to numbers, Pricol, where they've said that Vikram Mohan will be the chairman, and Reflex buzzing on the volumes side. Sai Life Science, the stock has been under pressure on the back of the revenue miss, and EPL is also a earnings impact, along with the Texmaco Rail, Muthoot Finance, all United Spirits, Global Health, as well as a PN Gadgil, and you have OMCs that are in focus. It seems that fuel price hike is not enough. So that's what we are watching out for in terms of the watch list. But Sharad, over to you to take the rapid fire with Sachin Janardhan.
Well, yes, and this is a welcome break. And we are not today the market pit, but definitely the action is there in the market.
After long.
Exactly. So for our viewers in the trending stocks, this is a rare time when me and Hiral are together in the same screen. But just the format remains the same, right?
Absolutely.
So let's go to Sachin Janardhan Sarvade. He's the independent market expert. Good afternoon, Sachin. It's always a pleasure to have you with us. And I'd like to start with the first stock, that is Infosys. A little bit of short covering is at play for the IT stocks as well. Do you see a little bit of more recovery coming in these counters?
Thank you for having me. And continuously we are seeing in all the IT stocks, basically it is making a lower high and lower low pattern. So any kind of a bounce is actually a selling opportunity to add. And normally the pattern what we are seeing is it is not able to cross even the 10 and 20 day EMS basically. So 10 and 20 day EMS currently is at 1148 and 1181 levels. So any kind of a resistance move towards these levels. So I think again a newer low will be made in these stocks.
Right, Sachin, I'll just like to have one more large cap, Coal India. Let's do a chart check on that. There's a good volume buzz happening as well, positive momentum. Your views on that?
So Coal India, what we are seeing currently, it is the opposite of Infosys basically or IT stocks. It is continuously making a higher high and a higher low pattern. So any kind of a dip is an opportunity to add. And today what we are seeing is opportunity one can add. And what we can see on the upside is around 490 levels. On the downside, the support levels is around 450 levels.
Right. Let's pull out the Adani group of stocks. They're also doing well in trade. The legal overhang has eased. Just wanted to take your views on it out of this Adani group pack. Anything which is looking good, especially on the risk-reward ratio?
So currently from an Adani port is looking good from Adani group, and currently what we are seeing is continuously making a higher high and higher low pattern. Even today also only in Adani group, only Adani port is thriving and it's positive, and it is trading above its opening levels basically. So it is positive. What we can see on the upside is 1874 and 1900 levels on the upside. On the downside, 1737 and 1680 levels are the supports.
Well, that's an interesting take coming in, but just a proper disclaimer coming in regarding the ownership and of Adani Media Holdings, which has the ownership in this channel as well. Moving on, one more company is there. After that, again, we'll have a second round of rapid fire for our viewers. That is volume buzzing Hindalco. A good strength in the metal counter is something which we see, but now a little bit of profit booking coming in. Sachin, your views on it? A little bit more profit booking left in this?
We can see that because continuously basing what we are seeing, it is making a higher low pattern, but on indicator basis on RSI it is making a lower high basically. So that is a negative divergence. So at the top, negative divergence indicates profit booking, and what we can see towards at least 1000 levels for this stock, wherein the 50-day moving average is there. We can, if someone wants to add at that levels, that will be good level. But as of now, we can see a bigger, the smaller correction basically what we can say.
All right. Of course, we'll hold on to that rapid fire because we'll have some more stocks coming in. But Hiral is also having a list with her, and that's interestingly the trending stocks. Hiral, what are the trending stocks?
Yeah, I mean, apart from the ones that you took through as well in terms of apart from Hindalco, you have a Nazara Technologies also, which is in focus. There has been a large block deal, and it seems that one of the promoters probably is selling. That stock is up 16% in trade. What is your view?
So the stock was in a downtrend basically, and it has moved up from the 200-day moving average. Today's move is actually a blast move, what we can see, and it is accompanying with volumes basically. So it is a breakout levels if it is closing above 300 levels, and upside what we can see is around 344 and 387 on the upside.
Okay, Pearl Global margins have expanded in the fourth quarter. The stock also seeing some good moves in trade today. Stock up 11%. What are charts indicating, Sachin?
So Pearl Global, overall the trend is bullish. It is making continuously higher high and higher low pattern, and today is a breakout if it is closing above 1703 levels, and in that case 1880 and 2057 levels will be the targets on the upside.
Pricol, you have Vikram Mohan, who will be chairman. That's the announcement that has come in, on the back of which the street seems to be happy. Would you be a seller in terms of booking profits on the Pricol, or are you seeing further investment opportunity?
Investment opportunity will be massive if it is closing above 640 levels. I will be basically level specific in this stock, because overall the movement is sideways to down basically. But once it is closing above 640 levels, then we can see a breakout which can take stock towards 700 and 780 levels as well.
Okay, what about a Reflex? Because it's just buzzing on volumes. Pretty good amount of strength there.
Reflex overall trend is down. It is advised that one can book profit if they are getting some kind of profits and exit.
And what about a EPL, Sachin? On the back of an earnings impact, that stock is in focus, down 6.5%. Is there an opportunity there on the charts?
If EPL today closes below 214 levels, so it will continue basically downtrend, and in that case one should exit.
Okay, OMCs are still not happy with the kind of price hike that has come in. The stocks have been under pressure today because there is a big disconnect in terms of what they need versus what has come so far. Would you be a buyer?
I will avoid total the OMCs, and I will be a buyer on the other side, basically the Oil India, ONGC, so that will be the favorites.
Okay, so don't buy OMCs, and Prime Minister Narendra Modi is also saying don't buy too much of fuel. Global Health is another one, strong results. How are you looking at it?
So Global Health overall, the stock name is Medanta basically, and the trend is good. What we can see, if it is closing above 1244 levels, then we can see 1388 and 1532 levels on the upside.
That's a pretty interesting take coming in. It's a very long session we had, Hiral, of the rapid fire segment. But let's focus on the stocks which are there on the Google. What are the Google trending stocks suggesting? Let's just pick out the stocks which should be in focus. And yes, look at that. Vidhi Specialty, the small cap name, is doing there. Kaynes Tech, of course, a little bit of sell-off pressure coming in. We have Adani group of stocks, and MTA Tech, a little bit of profit booking also coming in. Just wanted to take the views, MTA Tech, Sachin. Of course, there's a good rally now, a little bit of profit booking coming in. What are the technical charts suggesting?
So MTA Tech, what we can see is the similar with the Hindalco pattern. Basically, it is making a higher low pattern, but continuous basis. But RSI is on a divergence mode, so it is a negative divergence. Buy on dips will be the strategy. 6,000 levels, what we can see in a profit booking on the downside. But that levels, if in case it comes around 6,000 and getting a support level, then one should add it.
Okay, so that's with regards to, what Sachin likes from stocks that are trending on Google. But thank you, Sachin, so much for joining in. Always a pleasure to speak to you as well. But moving on to the primary markets, Flipkart's IPO plans may be pushed further, with sources indicating a delay in listing timeline. Nimit joins us with all the details that he's picking up from his sources. Nimit, what are you picking up, and what are the reasons for this?
Yes, so a volatile market like this cannot take so many large IPOs. That is the information I'm receiving from sources, and that is the reason why the Flipkart IPO, which was looking at a 8 to 10 billion issue size, is being pushed back. Because already this year we're going to see Zepto, we're going to see Oyo, we're going to see NSE, which is going to be a large size IPO, as well as Jio. So what Walmart, the primary shareholder and promoter of Flipkart, has told them is that essentially the market cannot absorb so many IPOs right now. Now, what sources also tell us is they're not looking at an IPO in the near term as well. They're looking at it likely in 2 years, in 2028. So it's been pushed back quite a bit. Anyway, this is important to caveat here that Flipkart was not urgently planning an IPO anytime soon. They were looking at it towards the end of the year to file their documents. Now that looks like that's been pushed because Walmart has been clear that we do not want to go forward, as the Indian market, in the volatile market that it is right now, cannot absorb that. Remember that this is the second Walmart-backed company this year to defer plans after PhonePe, which we exclusively broke here first, that PhonePe has also deferred its plans for its IPO earlier this year.
Okay, so multiple delays that are happening in terms of the primary markets as well. Thank you, Nimit, for that update, from here on. But moving on, a robust show from Shadowfax in Q4 as the company turns profitable with strong volume growth across service lines. To discuss the quarter gone by and outlook ahead, joining us is Abhishek Bansal, CEO and co-founder of Shadowfax. Abhishek, welcome to the show. Always a pleasure to speak to you at NDTV Profit. My question to you is, in terms of the way the quarter has been, question is sustainability and growth from here on. How are you looking at FY27?
I think FY26 has been a remarkable year for us. FY27, we expect to carry a great growth momentum, continue to gain market share and outpacing the overall growth of the market. We expect FY27-28 to continue growing at about 28-30% for us. While we have become profitable, I think last quarter we have obviously had one of our best quarters in terms of our EBITDA as well as PAT. We believe year on year we'll continue adding 100 to 120 basis points for the next 2 years on top of what we have already done. And post FY28, we'll probably see more operating leverage coming into the business, anywhere between 200 to 250 basis points.
Abhishek, hi, this is Sharad here. We had hosted you in KYC around 3 months ago, and interestingly, we had spoken about two things. First one, of course, the moderation in capex. Is that going to play out in FY27? And we spoke about one NCR also, your automated sortation facility. So, will that incremental benefit start coming in from the first quarter?
Yeah, we should expect some bit of incremental benefits coming in, but again, we are also parallelly setting up a lot more new centers. So there is some bit of drag that is going to come over there. I think net on our overall profitability level, we are still maintaining our stance of 100 to 120 basis points. Capex, I think last year has been phenomenal for us. We probably invested one of our highest Capex of about 185 crores, 4.5% of our revenue we invested in Capex. We are guiding that we'll maintain on an absolute basis a very similar Capex for FY27, because at a percentage level, it is going to come down now.
Okay, so Abhishek, my question then to you is in terms of where the margin profile operations go, because your margins have expanded when you talk about the fourth quarter. Where do you see it stabilizing in FY27? Because there is a fuel surcharge pass-through that will have to happen. I know petrol diesel prices have not jumped up that significantly right now, but there is a potential with what the need of the hour is. How will you look at it? Will you look at absorbing it and then letting it pass on through your P&L, or will it be passing it on to the consumers?
Just before we talk about what decision we need to take, and we are yet to decide exact specific working with our customers, but typically 10% of our cost as part of logistics is fuel cost. A 2 to 3% increase in fuel prices roughly impacts about 20-30 basis points on cost of delivery for us. Typically, most of our contracts, be it on the supply side as well as on the demand side, we have a fuel surcharge component and we have the option of passing it back to the customer. We are yet to decide on that. But I think given the way business is going, we don't feel there'll be any profitability drag coming unless there is a very, very big incremental change that happens over the next few quarters.
Right, Abhishek, we spoke about the CV upcycle. Of course, that time there was bullishness as well. But right now, the way the geopolitical issues have changed, the freight and this costing, that has gone up.
Yeah.
Do you think this logistics, which is a lag rally which happens after CV segment, do you think this will be a little bit of a moderation would be there at least in the first quarter or the first half?
So right now, we are not seeing any signs of that. I mean, if you look at Q4, we have probably seen growth coming in every segment. Every customer type of ours has been growing, and we are a second derivative of the market. So if the market is growing, then we tend to grow much faster. We are seeing a similar sort of a momentum continue even in Q1 this year as of now. Typically, one should expect that as some of the discretionary spends like travel, hospitality tend to go down, customers order more online, order at home, see an incremental rise versus basically people going out and spending money. So that's something very, very similar we saw during COVID times as well. Actually, while the global situation looks quite volatile, consumption in the country is actually at all-time best. And we continue seeing that momentum, and that's great news for us as a logistics company.
Okay, Abhishek, we're running short of time, but one question I have for you is, you are, actually incorporating AI in terms of your entire model. If in that kind of a scenario, one, are you going to see any cost saves that do come in? And number two, even in terms of where dark store strategy execution goes or moving to an EV fleet goes, how are you looking at that entire gamut to play out for you?
Yeah, no, I think two separate questions, great questions. I think AI is going to probably impact logistics in a positive manner more than any other sector. A lot of back-end tasks, a lot of decision making is now getting automated. We also expect that AI is going to basically bring more customers online, because now anyone can set up their shop online, start marketing without even requiring to code. So there's a huge phenomenal potential that we see. I think in the short term as well as in the medium term, we think meaningful benefits are going to come through AI automation. Hard to put a number to it because we are not very sure how much we will absorb, how much we'll pass it back to our customers. But the overall cost of fulfilling a transaction is going to drastically come.
Right, Abhishek. It's always a pleasure to have you at NDTV Profit, and best of luck for the future. Moving on, we are joined in by Astha Jain. Astha, we are just discussing with the promoter of Shadowfax, a good up move coming in the stock as well. How do you see this, fundamentally growing? It's of course a new age company, recently listed also, but the numbers have done the talking.
Hi, good afternoon to everyone. So this IPO came way back in January 2026, I remember, and it was at the issue price of 126. From there, we have seen a sharp jump. So what is major positive about this company? That they have got an extensive network, and now they are catering to, at the time of the IPO, if I remember, it was around 14,758 pin codes they were catering to. So, their network was very, very extensive. And in fact, we really like the business model of the company as well. And hence, even we have given the long-term subscribe rating to the IPO. So right now, with the kind of the results the company has posted, we are still very much positive on this counter. And we believe that this counter has a potential to move more upside from here, because now they have crossed another 100 crore annual, PAT. So I think it is a milestone which the company has achieved. And in fact, their revenue is also up by 69-70% odd. So what a phenomenal performance this company has posted right from their IPO came. So my idea here is to stay invested in this IPO with a price target of 200 to 210.
Okay, interesting targets there. Thank you, Astha, for that. But OMCs are also in focus. In fact, brokerages have now started pouring in. Bank of America Merrill Lynch is saying that the impact on the CPI will be around 15 basis points plus over May to June. And there will be more hikes that will be coming in, but currently there is no change in the CPI estimate for FY27. They're baking in a 10 to 15% hike, assuming crude averages at $95 per barrel. Apart from that, if you have to talk about Morgan Stanley, what they are saying is that there have been phased price hikes daily or weekly, and this first increase is much lower than the 5 to 10 rupees per litre anticipated by investors. And this covers only a third of the current transport fuel losses. HPCL, BPCL, all of these companies will be in focus. Very quickly, Astha, your views when it comes to OMCs, because yes, the hike is less than what the street was anticipating.
Yes, and in fact, the results, even the hike overshadowed the result, because HPCL results were really very, very strong. So my idea here is that unless we don't get a strong hike in the price, these companies will continue to post downward momentum, and hence we are not very much positive at this moment of a time. Maybe till the next price hike announcement comes. Till then, we are believing that these counters can move downside. For HPCL, we believe that right now it is quoting 365. So it may fall to the level of 350 to 345 in the coming days.
Right, some more fall expected in the OMC stocks, but amid the ongoing tensions in the Middle East, Sheela Foam has delivered a strong set of quarterly numbers. However, the company may soon pass on price hikes to its customers in the upcoming quarters, says Rahul Gautam, the company's CMD, while speaking to NDTV Profit. Let's listen in.
Passing on the prices would not be so tough, but I think it's the availability and the volatility which would be the tough one. And that I am not forecasting as accurately as I would like to. But I think whatever may be the conditions, it should be okay. That's all I'm saying. We, of course, straddle across not low, but let's say mid-level to a high-level segment of the market. The demand is okay. We also have a wedding season coming on from middle of June onwards. So I think the demand is okay. The only thing that may impact it is the fear of inflation, which we are all aware of, that it's coming,
Strong turnaround numbers for Sheela Foam stock is up 11%, but another stock in focus is Sai Life Sciences, and Varsha is here to give us the entire picture about it. The stock is down 6% and trying to make a recovery in the day's trade.
Well, overall, if you see why the stock is under pressure, because it did miss revenue estimates. Revenue was up only was up only 4% year on year. And sequentially, overall, if you see on a yearly basis, there was a growth in EBITDA. Even EBITDA margin was at 29% versus 27%, and net profit was up 18%. But what market is seeing is, of course, one is the revenue growth miss. And also the sequentially, if you see, there's a decrease in margin. But one has to accept the fact that CDMO business, which Sai Life Sciences is into, is a lumpy business. So you cannot expect recovery quarter on quarter or strong growth quarter on quarter, considering the lumpiness in the business. And the other thing is, because all the CDMO companies, if you see, have given a good growth on a revenue basis also. Sai is the only one which has given only mere 4% growth, and hence market is punishing this stock. But overall, for a long-term perspective, this is a CDMO company which can grow well.
Okay, thank you so much, Varsha, for that quick one. A view when it comes to Sai Life Sciences, Astha?
So if I talk about Sai Life Sciences, if we just exclude other income part, then definitely the bottom line is showing a muted performance, and I think that is what not liked by the market point of a time, and hence results were also less of expectation. So Sai Life Science may fall more from here. This is what we believe, and hence we are not recommending any sort of buy call from here. Maybe at the lower levels is suggestible. Right now, we believe that this stock can fall till the level of around 1,050 to 1,000 rupees.
Okay, so that's with regards to Sai Life Science. Thank you so much for joining in. Always a pleasure, Astha, to speak to you as well. But completely out of time. With that, it's a wrap on this edition of Trending Stocks. From Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome to this very special show where we talk about a big development when it comes to the Adani Group. This has been a series of legal proceedings which have been dominating headlines. What we're going to attempt to do in this show today is try and explain what has happened, what is being reported, and what the perspective is. So let's start about what has actually happened. A major relief has come through for the Adani Group in a case that began in November 2024. I'm referring to allegations that have been made in the US SEC and being followed by the Department of Justice. Now, the latest update is that Gautam Adani and Sagar Adani have moved to the US court with a proposed final judgment in the SEC case, agreeing to civil penalties. The final order is now awaited. The settlement process comes after 2 years of efforts to prosecute with no findings.
And this could, of course, mark a crucial turning point. This is the same case that triggered a sharp market downtick for several stocks of the Adani Group back in November 2024 when those allegations came through. It related to an alleged $265 million bribery that had to do with the solar project of the Adani Group, and this is something that was funded by international entities. But since then, the group has steadfastly denied all allegations and mounted a strong legal defense, even questioning the jurisdiction. And now we're seeing momentum towards a resolution. That is yet to come, though.
Yes, in fact, reports firstly, a Bloomberg report suggests that the DOJ, that's the Department of Justice, may drop criminal charges while the SEC looks to close the civil case through a settlement, a move that has already been seen as investors coming in very positively towards it. So is this the unwinding of a major global overhang for the Adani Group? What we should also talk about is how legal proceedings like these, and however they may end, tend to trip up the progress of Indian corporates. So to speak on all of this, I'm joined today by Devin Choksi. He's MD DR Choksi FinServ Private Limited. Swapnil Kothari, Senior Lawyer of the Supreme Court. Sandeep Parekh, Managing Partner at FinSec Law Advisors, also joins us, as does Ryan Karanjiwala, Managing Partner at Karanjiwala & Co. Welcome to all of you, gentlemen. Thank you so much for your time. Mr. Karanjiwala, I want to first get your perspective on the significance of what has been reported. There's been an exchange filing, of course, by Adani Green, the Bloomberg report, and it talks about the move towards a settlement. What does this mean in legal parlance?
In legal parlance, of course, we'll have to wait to see what ultimately transpires, but in all probability, what is predicted to happen is likely to happen. Now, before I begin, there's one small caveat I wanted to add right here, which is that the Adani Group is a client of mine and Gautam Bhai is a personal friend. But nevertheless, I'll give you as objective a perspective as I can. So we'll have to await and see what happens ultimately in the court itself. But if what we are told actually happens, then what it does mean is that the case against the Adani Group goes away on their paying certain fines, and the matter stands closed. That's what will really happen.
Okay, let me get a view from Sandeep Parekh as well on what this means, because important to understand why people settle, why parties settle in a legal case. This one and what we've seen in the exchange filing is also made clear that this is a settlement without any admission of wrongdoing.
Hi. So I'm certainly not interested in the matter, so I can give you my objective views. I think 99% plus maybe 99.5% of all SEC cases actually result in settlement. So, and kind of slightly lower number, but a similar number also happens with the Department of Justice. So this is pretty standard if you look at the US system, and now increasing the Indian system as well, where SEBI cases are increasingly settled without admitting or denying guilt. So I think this is something which was expected, I would say, and like I said, more than 99% of all SEC cases are settled. So one should have expected this, and that's the way it's going, and this will put an end to the entire litigation, and there will be no kind of there's certainly no acceptance of any guilt in this. And in fact, it's not even called a penalty; it's called a settlement amount, really.
Interesting. Okay, so it's called a settlement amount. I just want to round up the view here and invite Swapnil Kothari to weigh in as well, because before I go to Deven Choksi to get a sense of how investors globally might look at this, there is a sense that this was hanging over the group in terms of future investments, in terms of the debt issuances that they might have had to do. This puts rest to all of that.
Oh, well, it does in a way, because SEC filings and SEC penalties can really tarnish your reputation. Now, you may not admit your guilt. You may try to find a way out, and you may say that, okay, well, let's settle this once and for all. And $18 million is possibly an amount of peanuts given the kind of reputation that the Adani Group has, and it has much more at stake than $18 million. Now, this SEC is the equivalent of SEBI out here. And, for once, I believe that SEC did not have enough evidence to give it to the people who, were, being indicted. And that is where, Adani lawyers, possibly, I believe it was Sullivan and Cromwell out there from New York, who tried to find, poke certain defenses into their system and say that, look, I don't think you have sufficient evidence to nail us. And it's best that you don't prosecute this or pursue this further. I do not know if any further diplomatic channels have been involved in this kind of a thing, behind the scenes. But I'll take it at face value and I'll say that maybe there was not enough evidence to nail Adani in this. And these were mere conjectural aspects, and SEC was possibly misled. And if it did not have enough evidence, somewhere, it felt that it's best to settle. And then now we wait for the decision and the judgment of the U.S. District Court of New York, U.S. Eastern District Court of New York, to try to find out and try to come to the conclusion which may be favorable to Adani. Yeah. So, Alex, I think this is, and Tamanna, of course, this is something which I think Adani would be, heaving a sigh of relief with.
It's to some extent, there's been quite the run-up in the group stocks of the Adani Group. Deven Choksi, even in the run-up to today. So in a sense, there was perhaps an expectation that this would come to pass. But in the context of the massive CapEx program that the group has yet to undertake, it has invested a large amount of money, and it has a considerable amount of investors that pour money into the group from overseas as well. Does this pave the way for an easier fundraising program heading into 2030? They've got massive plans afoot.
Yes, Alex, good afternoon. I'm glad that you have touched upon this point. Well, I think the most importantly, as you rightly said, I think the group is basically a proxy to India infrastructure, and particularly I think in the power and power-related infrastructure, apart from other India infrastructure stories like road, airport, data center now, etc. But more importantly, I think power and power India infrastructure, I think the group is definitely, having an end-to-end model in place today. And that's where probably I think the growth was getting hampered till the time this particular judgment came in. I think it is opening up the market for the group on two counts. One, that attracting the debt money, and second, attracting the equity money, both. Because up till now, I think those investors who have probably been not comfortable putting money till the time this embargo goes away, I think they are now probably thinking in a right direction for putting more money into the company. So that's the first point. Second point, I think out here would be the repricing of the existing debt. Up till now, I think the challenge was that also, that I think the current debt, I think if it has to be repriced, probably, I think that door was not opening, largely because of this embargo on hand at that point of time. Now that is also getting out of the situation. And third, which is equally important point out here, that the group is basically powering with a disciplined CapEx program, along with, I think, 20% CAGR in the EBITDA, which is basically giving sufficient amount of clarity to the large investors to walk into the investment into this particular group. So we believe that I think this particular judgment, this particular settlement, whatever you want to call it as, I think is definitely paving a good way for the group as a whole to attract more investors and systematically, I think, see the re-rating of the stock in the marketplace.
I do want to, and there's obviously more in the way of a conversation about the legal aspects of this case. But I do want to double down on what you've just spoken about, Devin Bhai, because from the perspective of the group, there was first the attack that took place, the Hindenburg attack that took place, and then there was the SEC. And so there was a concerted effort by the group to double down and reduce the debt that it had on its books. There is a clear statement also by the management of the group to say that it is not dependent on external sources of funding. So it is merely a case of using leverage effectively to get the most value of the time that it has on its hands right now. So can you explain that from the perspective of what the group is currently trying to do? And is it possible that in the near term, you could see a dramatic improvement in the metrics for several group entities?
Yes, absolutely. I believe that I think currently they have against the CapEx and against, I think, the deployment program, the EBITDA contribution which is coming in is a systematically improved EBITDA with, I think, around 20% plus kind of CAGR, I think, which we are observing across most of the group assets. So that is an important point to recognize because you are generating your own cash profit and you have got the CapEx discipline. Today, your debt exposure to your EBITDA is 2 to 2.25 times. So as a result of which, I think that discipline is giving a good amount of visibility even to the investor that the company is not going to be overspending on CapEx program. At the same time, I think it will be more disciplined on that particular aspect. Now look at the respective assets on which I think they are operating. Suppose if the road asset has to be taken into account or airport assets to be taken into account, they actually work on, I think, daily cash flows and negative working capital. Similar is the situation with the power and transmission assets, wherein I think you're collecting the dues and at the same time, I think it is a significantly large amount of money, close to 90-95% is the EBITDA margin out there. In the green power segment too, I think once having installed the IPPs, I think you're basically generating significantly large amount of power. And that is where probably the entire cash flow mechanism comes into play. So frankly speaking, across all the assets, if you look at it, I think they are cash flow generating assets as far as the group is concerned. And that's what some of the annuity investors, pension fund investors, insurance investors, sovereign investors find very comfortable that when the business is generating daily cash, and that gives them the good amount of power to negotiate with either the lenders or even at the same time, I think, give better credibility in front of to the investors, I think, as far as the attracting a higher amount of investment is concerned.
Okay.
So I believe that, I think, yeah.
I just want to, I think, there are two parts to it. One is what investors look at in terms of EBITDA, cash flow, debt management, etc. And then one is the perception of it. And we should actually address this head on. Swapnil Kothari talked about it in his first response. And I want to come back to you on that, Swapnil. There are two ways of looking at it. And we've heard all the legal luminaries on the panel. One is that a lot of settlements do happen. It's process, it's procedure. And then the point that you made, that you have to also look at the settlement in the context of whether prima facie merits of the case were considered or not. And to come to your point that prima facie, there were two parts to this case, right? One is if the allegation is of a possible bribery in India, why is the US DOJ and the SEC seized of it? Do they have the jurisdiction? And is there any merit to it? Is it fair to say that both those points have now been addressed and that case has, and that question has been addressed today?
Well, Taman, excellent question. It's pretty much moot now, given the fact that if you see the release of the SEC, that is the Securities Exchange Commission release 26554 dated yesterday, in that they have clearly mentioned that there were these anti-bribery sort of talks, which Adani talked about and said that, sorry, we did not bribe anybody, but it was a $750 million bond offering. And that is where the SEC would come into the picture. Now, the fact is to what extent they have the jurisdiction or not must have been debated behind closed doors, and where the defense lawyers would have said that, look, we can really pull you up. You really don't have this kind of jurisdiction. It doesn't matter what I did in my own backyard. But the point is that the SEC must have realized, well, this is going to be a protracted litigation. Why not just settle it at $18 million? And then the same proceedings have been filed in the Eastern District Court of New York, where if the court is more likely to approve this, given the fact that the way SEC would have worded that. So the point is that this is something, Tamanna, lack of jurisdiction is first. Secondly, you have to have presented evidence. Now, how do you present the fact that there has been a bribery of Indian officials to buy a power from Adani Green? How do you present that? Unless you have really cogent evidence, it's going to be very difficult, Tamanna and Alex, to do this. And if you are not going to be able to do this, given the fact that you are dealing with an Adani group, which is one of the most powerful business houses of India, then, the SEC will come into some sort of a radar saying that it really pulls up people unnecessarily trying to extract money. And, this is some allegation which can be there even in the newspapers tomorrow. So in the American newspapers, that's what I mean to say. We can debate ad nauseum here in the Indian newspapers, but if the American newspapers were to carry some kind of an article to the extent to show that the SEC unnecessarily harasses people, it engages or it invokes the SEC Act of 1933 and things like that, Securities Exchange Act of 1934, which are the US legislations, the two main legislations. So, under which you can really pull up people for violating their laws, including bribery laws. So, this is something, which I believe that the defense lawyers have succeeded, and much to Adani's relief. And I think this issue, within a couple of days, should the court approve, be rendered moot and be all over and done with.
Yeah. Okay. I just want to get your view on this aspect, Sandeep, that has just been discussed with Swapnil. What is it that we should infer from out of this? Because truth be told, this entire case was not just some legal procedure happening somewhere in the United States, right? It became front and center of a lot of conversation. It has had reputational impact. It has had monetary impact on anyone who invests in the group company. So how should we look at it now in terms of what the core question will be? Was there any merit to what was being alleged?
No, so it's hard to get into the merits at this stage because, like Swapnil said, this is a moot issue now. If it's going through a settlement process, you can neither admit nor deny guilt, right? So it's really not, in fact, there's a current case in the US Supreme Court which goes into, the First Amendment rights of whether the whole concept of denying guilt after a settlement happens, whether, that's impermissible restriction on freedom of speech. So that case is currently going on in the US Supreme Court. Be that as may, when you say without admitting or denying guilt, that means that, Adani Group is basically saying that we don't want to get into this litigation. We don't want to get into the merits of this, even though the case is weak or strong. We want to put an end to it and kind of go back to our business, number one. Number two, kind of put an end to the litigation. And number three, if they have bond offerings, etc., this becomes a significant piece of information to be presented before global bond investors.
Mr. Karanjawala, your perspective on this will be useful because a lot of people who are not familiar with legal process will be looking at this and thinking, hey, they paid this certain money and yet they're saying that this is not an admission of guilt. If this proceeds as we anticipate it will, then the case will be closed. But how do you explain that important statement? This is not an admission of guilt. It is an attempt by the group to close a chapter and move on with the work that it needs to do to put hard assets to work and to create capacity that is currently being built right now.
So simply put, this is not, according to me, and though I'm not as familiar as the others on this aspect, as unfamiliar a thing in America as it looks over here. Very often you have a kind of a plea bargain where you sit down, you talk the issue through, you concede on certain points, you don't concede on certain points, and then you come to a conclusion. It's a sort of a business come legal decision which is taken, and once it is taken, you just move on and things are just go ahead the way they have, and your business continues as usual. So one thing I can say is that as far as I can see from a distance, this is possibly the best result that the Adani Group could have got for itself. There's no admission of guilt. There's a payment of a fine, but a difficult chapter in their business life is closed, and they have the ability to go ahead. The other thing is, which we have to also take it from the point of view of the larger business environment in the country and abroad. What you have seen, what you just saw yesterday in China, when Trump visited China, what did he do? He took with him all the business leaders of his country and paraded them there and said, these are the people I brought who will negotiate with you in order to make both China and America richer. One of the things this does is it opens up this similar possibility in India. And if you look at the Indian industry itself, you can see that the Prime Minister has as his industrial army a huge array of both very substantial business people who can take the country's pitch forward. For example, you'll have, if he were to go abroad with, say, a Noel Tata, now a Gautam Adani, a Mukesh Ambani, a Lakshmi Mittal, who's a steel czar, a Sunil Mittal, who's a telecom czar, Rajiv Singh, who's got a huge real estate play, Adar Poonawalla, who's into serums and pharmaceuticals, and then and many other people. All that together, today I think is a good day for India itself, because what happens is that you are able to finally again unleash your industrial army into pitching for the country in what is likely to be, in the years ahead, fairly difficult times. So I think overall it's a good day for both the Adani Group as also for the country itself. Because a person who recently has been announced as the largest businessman in South Asia has suddenly also again been able to unfetter himself and go ahead in the industrial world and go ahead in the business world, both in nationally and internationally.
Unfetter is the right
word. So I
word.
think overall it's a very good development for both the country and for the group.
Yes. Sandeep?
It's a very good development for both the country and the group.
Sure. Point taken. Sandeep, even when the case was filed and when the allegations were made, there were parallels drawn to other similar cases and very large global entities facing similar charges and settlements having taken place. Can you give us a sense, because you've probably studied these legal cases as well, can you draw parallels and explain how this has worked in the past?
No, so like I said briefly before, typically each of these goes into, depending on whether it's SEC or DOJ, these cases do, depending on what kind of evidence is presented, they go into a settlement negotiation really, where the SEC would sit across the table and say that this is what we have and it's a good case against you, etc. Obviously, they will kind of shoot for their side, and then ultimately, it comes down to numbers. And unlike India, which is kind of almost like a rate card, there it's kind of much more open for negotiation. And once both sides agree to a specific number, they come out with a statement saying that they've agreed to pay this amount without admitting or denying guilt. And similar process with the DOJ. So essentially, it's kind of a fairly fluid process in terms of how the number is arrived at. And this is, like I said, SEC, almost 99% of all cases end up in settlement.
So Swapnil wanted to come in. He had a point. That's why I'm raising his finger. Yes, Swapnil.
Yeah, Tamanna, one point, which I want to make, Alex, also is that the DOJ has been known to act at the behest of the government in power, and more particularly at the behest of this government in power. Now, this thing started in 2024. And I would not be surprised if this was done to somehow belittle an Indian behemoth, given the fact that at times India has put up its firm stand, not only against tariffs, but against all the American diktats earlier. So the point is, and DOJ has been in fact grilled by many of its own senators and in the Congress. If you see some of those proceedings and on YouTube, you will see the amount that the DOJ goes through as far as this is concerned. And they have had to really come out with plausible answers. So Tamanna, if an SEC has an allegation of this extent, you're involving a behemoth like Adani, and you are not able to substantiate it, and then eventually you come down for a measly $18 million to settle. It is going to raise some eyebrows as to the veracity of the claims or veracity of the allegations that were raised against the Adani group. Because SEC is known to be extremely tough, fairly fluid as the numbers may be. But the point is that if it were to go hammer and tongs, at least for initial few years, then it would have arrived at possibly 5 times or 10 times the higher figure had it had teeth in the allegations that it made.
Okay, that's an important inference and observation that has been made by Swapnil. Devin, by just the point that Mr. Karanjiwala was making about unleashing Indian behemoths and how this is beyond one legal case, one group, one story, right? Because of how interconnected this is. Just want your thoughts on that picture coming in as Indian corporates are also flexing their might. And we do live in a world where the corporate entity is enmeshed with the national identity right now. You're not just a company, you're representing a country in whatever you do.
Absolutely so. And I think that is not different in America as well.
Yeah.
Make America Great Again program, I think, is definitely inviting investors and corporates from outside the world to invest into the country. And no wonder Adani has committed about $10 million worth of investment into America and creating 15,000 jobs. So which president of the country would not accept this kind of proposition? I think they definitely do. So on one side, I think these kind of equations, I think also settles to a greater extent the geopolitical equations in the political environment, which is fundamentally very important when it comes to, I think, the group taking such kind of initiative. That means we are not only India specific anymore now. I think we are expanding into the other parts of the world, including in America. And that is a large statement. And frankly speaking, I think everyone probably in the business circle out there also examine this particular subject very carefully, including Department of Justice. I think would probably, give weightage to this particular aspect. That a corporate, which is basically putting more money in America now for investment. In my viewpoint, I think we are showcasing the ability of our Indian corporates. And that's where probably, this kind of judgment plays a very important, settlement plays a very important role in my viewpoint.
Thank you so much to all of you for joining us, where we're just trying to unpack this. We want to put out those standard disclaimers once again. You're watching this on NDTV Profit. It's part of the NDTV group, part of AMG Media, which is an Adani group company. So we're putting that out front and center. But we are talking about this story today on its merits. It's a significant move for India Inc., of course, for the Adani Group and for Indian markets too. With that, thank you so much for joining us on this special show from me and Alex. But stay tuned. All the action continues after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come to...
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of VIN Solutions. Now, if you look at the stock price, it's up nearly 25% in the last 1 month. But on the financial side, though the revenues are up 20%, profits are down nearly 4% and margins have taken a hit on the back of higher cost. What's the way forward is the key question that we'll be asking the management on the show. Apart from that, we'll be also speaking with Antelope Salon. Now, this counter has reported a strong set of numbers in the fourth quarter. Moreover, the royalty change also benefits the company. What could be the quantum of benefit that could come in for this counter is something that we'll try to discuss and decode with the management on the show today. Apart from this, we'll be also discussing a couple of stocks. Firstly, Wakefit Innovations. Now, the stock is down nearly 89% from the February highs. So what could be the reason behind this lows? And also, if you look at the Sheela Foam earnings, it was quite strong, and that could be one of the reasons why the counter has been buzzing in trade today. But what were the reasons why the stock has fallen is something that we'll try to decode on the show. And apart from that, we'll be also talking about the stock Zaggle Prepaid. Now, the stock is down nearly 15% in the last 5 trading sessions, and this is despite the fact that the company had reported a strong set of Q4 numbers. So what could have gone wrong on this name is something that we'll try to discuss with our fundamental guest on the show today. Now, if you look at the market, Nifty has been struggling to cross above the 23,800 level, but it has found support near the 23,700 level, and currently we are trading around the 23,750. Largely range bound is what we have seen throughout the day. Not much big moves that are coming in after yesterday's move that we saw in the market. On the sectoral side, if you look at the Nifty Metal Index, which was seeing strong buy flows for the last couple of trading sessions, is one of the top sectoral losers in trade today, down around 1.3%, followed by Nifty Oil and Gas. This is largely because of the oil marketing companies. But on the gaining side, we have Nifty IT and Nifty FMCG, both up more than 1% in trade today. And also a good day for the small cap names as well. Which are the key stocks here, Mahima, that one should keep an eye out for?
Right, so first I'll start with what's not working. So something like Visa Steel is not doing well, down by about 4% odd. Then Uptown is also down by about 4.7% odd. Something like a JN Irrigation is also under pressure today. It's down by about 4.7% odd. Then JG Chemicals is the other name that's down by about 4% odd. Zaggle Prepaid, this particular counter did very well in Q4, but I think valuations being a concern here has taken a knock since the past 5 odd days, down 4% odd as well. PNB Gilts also down by about 3% odd, and you have BF Invest as well as EFC, which are also down in that range of 3% each. But on the flip side, you have something like a Wakefit Innovations that we're going to talk about in the show also today, is up by about almost 16% odd after a significant downfall that it's seen. The stock almost half, but now has picked up in trade today, probably on the back of a positive sentiment of earnings that we saw from Sheela Foam. You have something like a Sarkar Health, which is also up 15% odd. Solara Active also up 12.9%. So if you take a look at the positive side of things, there are strong up moves coming in as compared to where the negative side is concerned. So the advanced decline ratio, where a lot of these small cap names are concerned, is quite wide and in the favor of buyers as we speak. So that's with regards to where the overall small cap names go. But as promised, let me get in the management of VIN Solutions. Raja Debnath, Managing Director of VIN Solutions, is joining us now. Sir, thank you so much first of all for taking out the time. Mahima this side. My first question to you is with regards to your Q4 numbers. If I take a look at your standalone numbers, there's a good growth where the top line is concerned. First of all, I want to understand on a QQ basis what has led to that 20% growth. But at the same time, PAT did see a downtick of around 4%. So just want to understand as to what's happened here.
We are a product company, okay? And as such, our revenues which are there, they do not happen just because of something happening in that particular quarter. So these revenues that we are seeing in this quarter or any quarter, they are the culmination of efforts which have gone in over the last maybe couple of years. So the revenue trajectory, new signings don't affect new revenues. New go lives will not affect revenues. These are revenues coming from existing clients. So that's point number one. In terms of the PAT coming down, so revenues 20%, they are up quarter on quarter. The PAT, which has come down by 4%, that is primarily because our depreciation costs have gone up in this quarter. And that's the reason why you are seeing that change out there. But if you look at the FI basis from a full year basis, we are showing close to a 60% increase in our profit over last year. So our trajectory is right.
Okay. With regards to where margins stand, just want to get a sense as to what is the normative range of margins that you're aiming at in FY27, because there has been fluctuation when it comes to FY26.
Sure. So the margins that we track are on the EBITDA side, more on the PAT,
Yes.
more than the PAT. On the EBITDA side, last year we were at around 45%, 46%. This year we are at 53.8. So the margins have gone up, and we should continue seeing margins in that range of between 47 to 55. That's the range that we will track on the EBITDA side.
Okay. Right. If you could give us some idea of what is the growth that investors should expect from this company for FY27 and FY28 as well?
Sure. So the way we have been growing over the last couple of years, so this year also, if you see on a standalone basis, our top line has nearly doubled, and we should continue seeing the similar kind of growth rates. So I will not give you a better guidance than that, but I can suffice to say that the growth rates that we are seeing will continue at least for the next 3-4 years.
Okay.
And this is on the back of the strong order book that we have. Now, because of that order book which is there, and as I said, the revenues which will come in, for example, in FY27, bulk of this will be from our existing clients itself. So existing clients who are using the platform, that's the reason why we will continue seeing the growth, and we are able to then predict what the numbers will be for the next couple of years.
Okay. And what is the order book looking like right now?
So we have a pipeline of close to $80 million right now. And when I say an $80 million pipeline, it means qualified pipeline where conversations are going on, which are 5-year contract periods. So most of our deals are 5-year contract periods. So this revenue that you're seeing, or the pipeline that I talk about, is the contract value over the next 5 years across multiple products. So we have moved beyond just being a monoline supply chain finance company. We have spread ourselves across supply chain, adjacencies of transaction banking, on trade finance, cash management, LMS, LOS products. 75% of our book now is non-supply chain finance. So the new products that we have, those new products are showing a lot of traction in the market. Banks are finding it interesting, and close to 50% of our customers right now are talking to us for beyond one product. So not just a supply chain finance or a trade finance, it will be that plus something else. That's how the order book looks like.
Okay. I believe sometime back you had raised some funds. So what is the update on that? Has that been completely utilized? By when can we expect some returns on the utilization of these funds?
Funds that we had raised through a pref round, I think around October, November, when we had raised, those funds have gone towards building the new IPs and the products that we are doing. So as a product company, we continue investing heavily on our products. We are at the fag end of this capex cycle. Next year, or this current year, should be the last year when we continue investing on our product build. And as I said, from a return on those perspective, we are seeing a very heavy pipeline, as I just spoke about. And the investments which have gone into these new products, they're reflecting in our pipeline already. As I said, 75% of our pipeline is non-supply chain financing.
Okay. With regards to your global expansion, what are the plans like going forward in FY27? What is the split right now? What is it going to look like going forward?
So our pipeline, I would say 70%, as I said, close to exactly 70% is outside India. So 70% of our pipeline is outside India. In terms of our expansion, clients will continue getting expanded, but seeing the geopolitical scenario that we are seeing right now, we are not opening new offices in outside India right now.
And one thing that I wanted to check, I believe recently you have enabled Shree Cement dealers for financing through the PSB exchange platform. Apart from that, any other companies or any other dealer association that you're already in talks with, and what usually is the size of transaction that happens here?
So Shree is the latest one. There are many more which have been announced, and some we have embargoes in terms of announcing. But suffice to say that across the platform, we have close to 80 plus corporates who are at various stages of either approvals or they have already been approved. And these transaction sizes could be as small as 100 crores and it could be as high as 10,000 crores.
Okay. Just one last question from my end. With regards to your subsidiary, there was a dispute being flagged with regards to governance and control rights. Just want to get a sense as to what's happened there and what's the update that you have.
So we have gone for an arbitration on that because there are some governance issues out there. It's a small subsidiary. It's not a subsidiary. It's one of our subsidiaries had acquired some stake in another company. So it's not material as such. It contributes to close to just 2% or just under 2% of the revenues, loss-making company in that sense. However, there were issues on governance in terms of the promoters not being forthright in terms of sharing some information, and that's the reason why it's in arbitration right now.
Sure. Okay. Thank you so much, sir, for helping us answer that, because we'd gotten a lot of queries regarding this. So it would have been. It's always better for clarification coming in from the company end itself. So thank you so much for clarifying that. With that, I think thank you so much for taking out the time and helping us answer all these questions. And always a pleasure speaking with you.
Yeah. One last thought I'll leave with you all.
Sure.
July 5th, we'll be eligible to go onto the main board.
Okay,
so
interesting.
So that should be some good news. On July 5th, we'll be eligible. So we have gone through the eligibility criteria. We meet all of them. So on July 5th, we'll be filing for it and then just wait for the approval from the exchange.
Okay, all right. Thank you so much for taking out the time, Raja. That was, of course, the management of VIN Solutions, but we're also joined by Nirav Ashar, the head of equity research analyst at Ladin Manharraj Securities, joining us now. Nirav, a very good afternoon to you. You heard the management. Any quick view on this one?
Good afternoon, and thank you for the invite. Well, it's a product development company, and as we've seen in the case of companies which are involved in product development and the intellectual property side, IP side, one important factor is that the product development itself is quite an expensive proposition. So typically a lot of funds tend to get diverted towards product development, and when it is successful, of course, or unsuccessful also, you have to monitor what is the accounting policy with respect to writing off the product development cost. This is one very important factor. The response to the product is again one thing which is going to be a key monitorable. And the third important factor is when you are scaling it up from the existing clients to new clients. So what will be the quantum of the marketing spend, the marketing and the sales promotion spend going forward? And another factor which I'd like to point out is that typically in the case of product companies, the product development typically never stops. It's just like going from one product to another or moving up the value chain. So I think this would be a continuous process going forward, and it wouldn't end by the end of the next year at least. That's what the feeling is. Looking at the financials, and it's not going to be a kind of a linear growth curve for the company. There will be certain inconsistencies from quarter to quarter. This is because of the peculiar nature of the business. Nonetheless, from a long-term perspective, looks interesting.
Okay, all right. Thank you so much for that view, Nirav. But time to take a look at the F&O space. And Vivshar joining by as always to give us that perspective. Shar, things have changed since we last spoke?
Technically no, because there has been an up move, then again a down tick, and again right now we are at the flattish level. So we're not able to understand which side the direction of the markets is actually going, and that's where a little bit of confusion is coming. But nevertheless, yes, you are right, Mahima, that the sentiment which was positive is still sustaining. Of course, Tech Mahindra, Infosys, good reversals and short coverings are happening in the IT space. That's where the action is, but nothing much there. Reliance is still unchanged. That's the way, the push is coming downwards towards the Sensex because of the high contribution coming in. But yes, it's a stock pickers market, as we had discussed earlier 3 sessions ago. Let's get in the long build-up stocks to understand where the action is. And United Spirits and now Crompton Greaves also comes to the party. Almost you can say both of these stocks are up 4 to 5% in the trade. Good long build-up. Apart from the long build-up, if you look at the second important short covering segment, that this is where the action is, and the buying has intensified. Tata Motors PV, the stock is up 6%. While Patanjali Food, the interesting name after a long time seeing an action, that stock is also up almost 4%. But on the long and winding names, we have Hindustan Zinc and HPCL. Of course, the reactions are happening, a little bit of profit booking coming in the metal space as well. And lastly, I'd like to point out the short build-up. That's definitely Muthoot Finance. It's still doing it. Last time I had a check at around 11 o'clock, and HL also. So both of them remaining unchanged. So these are the stocks which should be in your radar in the F&O space.
All right, Shah, thank you so much for getting us those details. But viewers, time to slip into a very, very short break. But we'll be right back answering or addressing more small cap buzzers on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Welcome back. You're watching Small Cap Buzzers. Now let's get in our second management on the show, Suniti Kumar Bhatt, Managing Director of Antelope Salon Energy. Well, sir, a strong set of numbers in the fourth quarter, but starting off with the most important part, the recent change of royalty that the government of India has announced. How does that benefit the company, and by how much can your realizations move up?
So thank you for this opportunity. Let me address the royalty change notification that has come in. We have looked at it essentially for us. We think that it is going to, for every barrel that we produce, it should add around 3% to our EBITDA. So around 3% flows to the EBITDA. And the reason it is like that is to do with the fact that most of the contracts that oil and gas companies have are either production sharing contracts or revenue sharing contracts. So when the royalty comes down, the revenue share pool or a profit share pool in production sharing contracts increases, and therefore government gets increased revenue there from an increased revenue share or profit share. So it will be really company specific. For Salon and Antelopes, it is going to be around 3% that we will see straight away flow into our bottom line.
Okay, and now coming on to your financials, for FY26 you have already achieved, in fact you outpassed surpassed the guidance that you had given, the exit rate of production. For FY27, what is the production guidance, and which are the factors that will help you achieve that?
So for FY27, we are expecting that we will take our production to around 2,500 barrels of oil equivalent per day. What we think is going to get us there is going to be the increased activity in our core fields, which is Bakrol, Kyrgyzstan, increased production hopefully from our KG Basin and Cambay fields. We are in the middle of a drilling campaign. In Bakrol, we plan to drill and frack 10 wells. I think when we exited last fiscal year, by that time, 2 of those wells were contributing. So we have another 8 to go in this year. And we have also submitted a field development plan with the regulator for our cornerstone Kyrgyzstan field for another 7 wells. Hopefully, we get the approvals from the regulator in this year. And then towards the end of this fiscal year, we will probably start one more drilling campaign in Kyrgyzstan. So all these things plus one more well in the Cambay field, we think we'll drill this year. So continued drilling activities across our operations is what we expect should take us to 2,500 barrels of oil equivalent per day in this fiscal year.
Sorry if I missed this. 2,500 is the average production number or the exit number that you're giving?
We are saying that we will arrive somewhere in Q4, definitely at 2,500 barrels of oil per day.
Okay, and anything on the average number? And by how much?
On the average number, I think it will really depend upon how quickly we hit it. We are giving the market a guidance of Q4 for hitting these numbers, but hopefully we hit them a bit earlier if we hit them earlier. So our averages should be substantially higher than the 1,400 barrels of average, 1,355 that we did this year.
Okay, and to reach that 2,500 number, just want to get a sense as to what are the capex that you're going to do in FY27. How is that going to be funded?
So we are expecting to spend around 160, 170 crores of capital into the business to fund the growth. Most of the capex is going to be coming through our internal accruals and our own books. We're not looking at any substantial debt or equity raise for the 2,500 barrels of production. In future, any new equity or debt raise, if we do, it is going to be for production going much beyond 2,500 in the fields, as we will understand a little bit more about the geology as we drill the wells in this fiscal year.
Got it. With regards to where the top line goes for FY27, the street is kind of estimating that the crude might be around at $85, right? On an average. So what are you expecting in terms of where realizations go, top line as well as EBITDA? What is the aim at internal? If you have any internal target set for FY27?
So rather than giving you any guidances on, because we haven't given the market any guidance on next year's EBITDA or the top line, but our investment philosophy has stayed the same, as we have said, is we will not do projects that do not get my cash back within a year or so at $50 a barrel. And we will always look at projects that give me a decent double-digit return at $70 a barrel. So anything that is above that, most of it, at least half of it, should flow through to EBITDA, depending on how much the profit petroleum and royalty will take away from us. So we are going to stick with that. But if these oil prices are going to continue, then probably our earnings will even beat our own internal expectations. But we really have no control on these prices, and I think we just handed over whatever the price is given to us. Our price is benchmarked to Brent. Essentially, we sell at a little bit of discount to Brent across our portfolio.
Yeah. Just one question that I wanted to check with you, sir. The capital expenditure amount that you mentioned, I believe the entire thing will be internally funded and no debt is something that the company will take on, and company aims to be debt free with no long-term debts?
No, for the 2,500 barrels equivalent of oil ramp up, I don't think we'll need to raise capital outside. Beyond 2,500 barrels of oil production, and depending upon how much, what the oil price will be and how much incremental revenue and profits we manage to book through the 2,500 barrels, we may look at raising debt or increasing our equity base to hit production volume much higher than that from the core fields.
Well, thank you, sir. Thank you for joining us and giving us the way forward for the company. Let's get in a quick view from Nirav Ashar, Head Equity, the fundamental guest today. Nirav, you heard the management, quite a strong outlook they have, and with crude prices being higher, the earnings are expected to grow multifold. How are you looking at this counter at current valuations?
Well, I think oil exploration and production has been clearly the flavor of the season, considering the fact that we are seeing crude oil prices hit the roof. And this management has always been very, very conservative. They have never gone overboard, and I think it's clearly being reflected in the way the management has articulated their vision going forward. And I think they tend to do their due diligence very well. And we've rarely seen this company being affected by the cycle of the rising crude oil prices as well as the falling crude oil prices. So in a way, this conservative approach is going to augur well for the company, and it's, as pointed out by the management, it's just going to add to their EBITDA margins and to their net profit margins, especially in a business where you have very little control over the prices, and prices tend to be very volatile. So I think there is an optimistic view as far as this company is concerned.
Right. Thank you, Nirav. Thank you for joining us and giving us your perspectives on the stocks that we discussed on the show. And lastly, let's get in part to understand what's been happening around Wakefit. The stock is down from its highest point, but has been gaining in trade today on the back of its peers' result.
That's right, Somit. So the main reason why Wakefit is gaining in trade today is because of its peer Sheela Foam, which also operates in the same mattress industry, by the way. And Sheela Foam has reported really strong Q4 numbers, with their EBITDA growing at 89% and PAT jumping 7 times year on year. Sheela Foam's growth was mainly driven by their strong mattress volumes across both the e-commerce as well as the quick commerce channels as well. Their mattress segment delivered very healthy double-digit growth year on year as well. Now moving on to the Wakefit's 9-month FY26 performance, their revenue saw a growth of 18% year on year to reach almost 1150 crores, while their EBITDA jumped to 93 crores versus just 21 crores year on year. Their EBITDA margins also saw very nice improvement to 8.1% versus just 2.2% year on year, with PAT turning positive to 67 crores versus a loss of 8 crores year on year. The management of Wakefit has also been really positive on their commentary as well, and they've said that their furniture business continues to be the fastest growing category as well. So with the results coming, with the company about to post their results on the 21st of May, the key things to watch will be their execution in the furniture scaling business, their ability to sustain profitability, and also their offline expansion pace going forward.
All right, Parth, thank you so much for getting us those details with regards to where Wakefit goes. After a really long time, the stock is seeing an up move of around 14%. But before we slip into a break, Prime Minister Narendra Modi has reiterated India's stance on resolving global conflicts through dialogue and diplomacy. Amid rising tensions in West Asia, speaking in the UAE, he emphasized that maintaining a free, open and secure Strait of Hormuz remains a top priority. Let's listen.
भारत ने हमेशा समस्याओं के समाधान के लिए डायलॉग और डिप्लोमेसी का प्राथमिकता दी है। हॉर्मुज़ को फ्री, ओपन और सेफ बनाए रखना ये हमारी सबसे बड़ी प्राथमिकता है। इस विषय में अंतर्राष्ट्रीय कानूनों का पालन आवश्यक है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me, as always, is Mahima Vachajani, and we'll try and solve all those stock-related queries. So do start sending in on numbers that are flashing on the top of your screen. You can also call us, talk to us, as well as our guest on the same number as well. That is also flashing on the top of the screen. But before we do that, a very, very quick check of how the markets are doing, because we're back, above that 23,700 levels. Just in the middle, we slipped, and as a level actually has been a key one for the markets over the last couple of days. Yesterday, the second half buying was very strong, and that's visible in today's trading session as well. But overall, when you look at the heat map for the Nifty 50 today, you're seeing some individual movers, largely some led by earnings and others by news flows as well. So you're seeing Tata Motors PV actually continuing to be the top gainer for the day after its results yesterday. There were some headwinds that the management called out for JLR, but the street's looking away from this at this point of time. It was a surprise on the EBITDA on the upside. So that's on Tata Motors, and we'll put more focus on it in the closing show as well. But apart from that, tech actually has come back from after yesterday's downtake. So some short covering that we're seeing there. HUL as well as Power Grid are some of the other gainers for the Nifty 50, but the sectoral heat map also shows you that perspective as well. You're seeing the Nifty Media, IT and FMCG, the top three gainers. While the others in downtake, the Nifty Defense Fund is down. Metals is taking some money off the table after a very strong last couple of months, as well as oil and gas and PSU Bank is also down in trade today as well. But overall, the broader markets also, Mahima, showing you that that move today. It's been the advanced decline ratio also, if we can quickly pull up as well, is the other one, because it's actually slipped back in the red, and we're seeing that the declines are now yet again having a say today.
Yeah, I'm just trying to count as to how many times the markets have moved, right? 1, 2, 3, 4, 5, 6, 7. 7 times we've shifted in terms of where whether the buyers are controlling or the sellers are controlling, and that's the kind of mood that we're seeing on the markets right now. It's confused and does not want to go into a weekend with any long positions, is what basically this means, because right now we are at 1400 odd declines versus that of 1200 odd advances. Let's try to pull up the mid cap 150 and the small cap 250. Since the start of the day, underperforming the benchmarks, the mid cap 150 has turned into the red, in fact, down by about 0.12 odd percent, and the small cap 250 also down by about 0.13 odd percent. Quickly, the BSE 500 before we start taking your stock related questions. Let's try to see. There's Sheila Foam, of course, on the back of strong volume numbers, and e-commerce and quick commerce growth has aided that, up 9%, followed by MedPlus Health, which is up 7.6%. Carborundum, Chambal Fertilizers are some other ones that are doing fairly well, but on the flip side, HUDCO, in fact, we spoke to the management also today on KYC, is down 7%. EPL, Muthoot Finance, as well as Ratnamani Metals and Hindustan Copper are some of the names that are seeing pressure in trade today. But Let's also welcome in our guest for the day. We're joined by Ruchit Jain, who's the Vice President, Equity Technical Research, Wealth Management at Motilal Oswal, joining us now, and Radha Raman Agrawal, Managing Director and CEO of Swayom Advisors, joining us now. We have a pending query, Radharaman, from our morning show today, which was on Transrail. I'm not sure if that query is still pinned, but one of our viewers asked about Transrail lighting and wanted a view on the charts for this one. If you could give us some perspective. Sorry, this was a chart, so I'll go to Ruchit then. Ruchit, sorry, your view on Transrail lighting.
So we have seen, the stock has been consolidating within a broad range since last month. The thing is that in every pullback move that you have seen in the stock, it comes around 600, 620, and again starts correcting from there. So unless we see this breakout above 620, the overall trend does not seem to be that positive. So if you are looking to add fresh positions to your existing positions, then I think you should avoid. The support for the stock is seen around 450. So 450 to 620 is a broad consolidation phase for the stock.
Got our first caller for this show. I think Murli is calling us from Hyderabad. Murli, very good afternoon to you. What's your query about?
Yeah, very good afternoon. This is Murli from Hyderabad. I have Yatharth Hospital, which I got through IPO allotment. About 50 shares, which I got at the average of 300, and I booked some profit and I sold about 15 shares. So I wanted to have under 3 months to 6 months view on this.
Okay, got your question. I'll again take this up with Ruchit. Ruchit, the fundamentals look very strong for this one. They've got, good pipeline also going forward. But overall, where charts are concerned, what are they indicating for the next 3 to 6 months?
So broader trend for the healthcare sector itself seems positive from 3 to 6 months perspective. And Yatharth also we have seen, although that in between corrective phases were there, but no, we are not facing any volume-based selling happening. So I think the stock should have limited downside from here on. From a near-term perspective of next 2 to 3 months, 750 to 700, this entire range where the 50 DEMA and the 200 DEMA lies a good support zone for the stock. So downside seems to be limited from here on. So I think you should continue to hold on your positions.
That view, but the next question is coming in now from this one's actually from Bala Subramaniam from Bangalore, and his question is on Tata Motors PV. So he bought 200 shares at 731 and now it's showing 363 in his portfolio. So I think Bala Subramaniam, there has been a demerger essentially of Tata Motors, and you might be seeing two different companies now, the CV part and the PV part separately in your portfolio. I hope that solves your query. He wanted to know if he should hold on to this script or dispose it off. Now, Radharaman, very good afternoon. Welcome to the show. You've seen some decent numbers actually from Tata Motors yesterday, but there's been some commentary as well that the management has given on JLR, citing uncertainty and the sustainability of these margins. So, two questions here. What should Balasubramaniam do now with both those stocks, and how did you view the results yesterday?
So first of all, thank you for having me here. So, my sense is that typically the stock will hold good, and in fact, the commentary was very, very positive on the Indian front. I think JLR remains a bit uncertain, but overall, the Indian business has been doing quite well. My view is very positive on the stock, and we should be holding on the stock. In fact, we could add PV to the portfolio at the current prices as well.
Okay, all right. The next one that we have is coming in on Saregama. Our viewer has got 120 odd shares at the levels of 500 and wants a 1 year view on this one. This is Rimple from Chandigarh. Ruchit, your view on the charts for a year?
I should hold on long positions. Last couple of trading sessions, the stock has seen an up move supported by very good volumes, so which is a good sign. For the near term, the higher levels target is seen somewhere around 490 to 500. So as of now, can hold on. If the stock comes around 500, then take a review again about that.
Got that view, Ruchit. But the next question coming in now is from Shankar, and his question is on the CV basis, CV companies, essentially Tata Motors CV and Ashok Leyland is what his question is on, and if it's the right time to buy into Tata Motors CV. Now, Radharaman, coming back to you here again, I think the numbers were decent, came in line with estimates as well, and just the management citing some commodity impact and the fuel cost hike could impact the fleet operators. I think those were some of the comments from the management. But how do you view TMCV? Is it a good time to add, or just wait on for a little while, see what happens in Q1 with the fuel prices?
My suggestion would be to hold on the CV side. So I think there are a lot of uncertainties given the fuel hike,
given the uncertainty in the economy. So I think CV cycle might take a hit. We should look at, wait for the first quarter numbers to roll on and then only take a call on this. So PV is good, but CV we need to hold on.
It's not a good time to enter, essentially, Radharaman. Would that be a correct assessment?
Yes, we should wait for the first quarter numbers. Yeah.
Got that view. The next question now coming in. This one, it's from Nalini from Chennai, and she's holding on to Grove, which is Billion Brains Garage, holding shares at 221. So she's bought it at that upper price band of that move. You do remember the IPO was somewhere around 100, 105 odd. So she basically has bought it after the 100% move now, holding 450 shares and needs an advice on what she should do with this counter now. Ruchit, I know a very, very recent listing, so not too much historical evidence, but do you want to take a crack at what Nalini should do and take a crack at this question? What would you recommend?
Certainly the buy price is at higher levels, but these are not the prices where she should look to book losses and exit over here. I think she would have to keep some more patience so that once this time-wise corrective phase is over, then when the stock resumes its uptrend, then she can get her buy price back or even higher than that. So overall, the stock, the structure does not look much negative. 160, 180 is a good support zone for the stock. So somewhere you can expect some time-wise correction initially. But yes, these are not the prices to book losses, so continue to hold positions.
Got that view, but let's go across, take a caller now from Pune, and Ashita has a stock query for us. Ashita, very good morning. Very good afternoon, actually, and welcome to the show. What's your query?
Can you repeat? I didn't hear you clearly, sorry.
Sorry, Ashita, can you hear me? What's your question?
I've bought 50 shares of Amara Raja Energy and Mobility Limited at the price of 1,400. Should I hold or sell?
Okay, got your question, Ashita. But what would you recommend here, Radharaman? She's bought it at elevated levels. Is there enough evidence to average down into this counter now?
I think averaging is not the right solution at this point in time. I think she should hold on to the stock right now, but should not average. So she should hold on and continue the investment.
It would take some time, right, to come back to that level of 1,400. So would you recommend her to hold till that current market price of her buying price basically comes back?
Yes, so sector at times, maybe the positivity on the battery side and other things can happen. So better to hold on, but I would not suggest to maybe average or maybe add here at this levels. So maybe hold on to the price for the stock currently. Yeah.
Got that view, Radharaman. The next question coming in from Ramana from Hyderabad, holding on to Siemens Energy India. Bought at 3,288. Now, Ruchit, she's holding 128 shares and asking what's a short to medium term outlook on the stock.
Hold on existing positions. 3,000 to 2,900 is a good support zone for the stock, and if this remains intact, then can expect an up move back towards 3,380, 3,400 kind of range. So overall, the risk reward ratio is still in favorable. So continue to hold long positions.
Also, Ruchit, one more coming in your way from Venkatesh, who's from Tamil Nadu. And he bought into Ola Electric last month when that move came in from 22 odd to 40 odd rupees. And he bought that at the upper end. So he's made a sizable investment of 7,500 shares. And he's planning to sell it next week, is what he's saying. Should he do that? What would you recommend? Is there any kind of momentum on the charts right now?
In last 2 weeks, I think the stock has just consolidated in the range. In fact, last 2 to 3 weeks, we have seen the stock prices trading within the range of 40, 41 on the higher side and around 34, 35 on the lower side. So this seems to be a more of a time-based correction or sideways move which is going on in the stock. So if you just have 1 week's point of view, then do not expect any significant momentum in the stock. But yes, on the lower side, 33 is a good support for the stock. So I would suggest that if you give some more time, then keep a stop loss below 33 on your existing positions and hold on.
Got that view, Ruchit. But next question coming in now from Sudarshan. And he bought into Star Health at the IPO price of 900 rupees. And that was almost 3 to 4 years ago. Stocks never come back to that level. So he's currently sitting on loss with his 32 shares. Asking what he should do, if he should sell, hold or average this counter. Radharaman, any view that you can offer? FY26, I think the earnings weren't the greatest yet again, but any view on the stock now?
I think he should maybe book the losses here and maybe look for other stock. So that's the advice. Maybe he or she can move into the whole piece in terms of insurance companies and maybe get out of this.
Any that you like on the insurance space, Radharaman, right now?
From a life insurance perspective, SBI Life, I think that looks very good. Max, so I think maybe you can switch to those companies and maybe exit Star Health.
Got that view, and hopefully that answers your question as well. I know it's a tough one, Sudarshan, to book your losses, but that's the advice that Radharaman is suggesting at this point of time. Next question coming in from the next question coming in from Sunil from Mumbai. He's holding on to 300 shares of Sami Hotels. Let's pull that counter up. Look at the 1-year chart as well, and he's bought these shares at 222 of Sami Hotels. Now he's asking what should he do with this counter. It's down almost 20%, and from that level of almost 240 odd, so very close to that level is where the stock topped and then seen a correction, and he's down 20% from there. What would you recommend here, Ruchit? Is there any chance of coming back to that 200 odd on the stock price for this one?
Doesn't seem for now. There's clear a lot of low bottom structure which usually seen in a downtrend, and in spite of the recent up move in the markets in the month of April, we have not seen that kind of outperformance or participation coming in with volumes in the stock. So I would recommend to take an exit from it.
Got that view. But the next question is coming in on Skipper. Surya from Dubai actually is holding on to this particular counter, and he has 2,000 shares of the company at 465, so very close. I think he might have bought it very recently only. Asking if he should hold on or sell out of this counter. Ruchit, what would you recommend?
So hold on at current levels. Now you can keep a stop loss on your existing positions below 435.
Okay, the next one that we have is okay, we've taken transfer lighting at the start of the show, so whoever is asking about that, I hope you can go back and listen to that conversation. Rajiv, we've gotten his query back. Okay, the next one that we have is from Mana, who's writing us from Gurugram, asking about Nalco. He's bought 50 shares at an average price of 190. Wants to know if it's advisable to book profits or continue to hold on. Ruchit?
Can look to book profits on your existing longs. The stock has already seen a good run up post your buying price, and what we can see that since the month of February, the stock is unable to surpass that 430, 440 mark. So quite close to that resistance. So at current levels, I would advise to book profits.
Okay, we've got Mahinder